Whitbread now confident that they'll see that post-lockdown bounce. Anna?
Danny, thanks very much. And Mark, as we close out this hour of the program, I'll be keeping my eye on banks and miners, things that could move on the Fed and the dollar.
Yeah, absolutely. What's interesting is yields are slightly lower again from last night, so no follow-through in the European session just now.
Okay, 155, yeah, the yield on the US 10-year right now. Thanks to Mark for spending the past hour with us. Lots of market reaction then to the Fed's hawkishness of yesterday. That's coming for you here in European equity markets. That's next. This is Bloomberg. Welcome back to the European market open. A minute to go until the start of cash equities trading. Here are your headlines. The talk on tapering begins as the Fed moves up its forecast for a rate hike, predicting 2 increases now by the end of 2023. The dollar surges. The ECB's Philip Lane tells us the central bank doesn't have a fixed volume approach to the PEP program. We'll bring you more from our exclusive interview. President Biden touts the prospect of better relations with Russia after his summit with President Putin, but significant tensions remain from cyber attacks to human rights. Welcome back to the European Market Open then, the second hour of the programme. 15 seconds to go until the start of the European equity trading session. And we're still living with some of the aftermath of the Fed, of course, and we need to price all of that into the European equity session, which was closed by the time we heard from the Fed. So the dollar was stronger yesterday and continues to be so, up 0.3% on the dollar index. No doubt that will have an impact. It's already had an impact on metals and commodities. And we're also looking at the US 10-year yield. It's a lot higher than it was, 1.56%, but its most recent move has been to the downside. We'll keep an eye on commodities and banks with all of that in mind. So European equity markets then just opening to the downside. The Stoxx 600 down by 0.2% this hour. The FTSE 100 down by around 0.5%. The CAC 40, the DAX, yet to open. The IBEX down by 0.3%. We'll look for any read across from the Fed into perhaps the banking sector, where we start to see that priced in. We'll look for the gilt open as well here in the UK. Did we maybe price in some of that concern around inflation, higher inflation expectations on the back of the higher inflation number we got in the UK yesterday? So have we already exhausted that particular move this week, or will there be further read across from the Fed? We'll keep an eye on gilt markets as a result of that, of course. So we're looking for mining stocks, also looking for any movement coming through there. I can tell you that the CAC 40 over in Paris now opening to the downside, in keeping with the other markets, down by around 0.3%. So European equity markets opening to the downside. The direction of travel is clear there from the GMM. You can also see the selling that's going on in sovereign bond markets. The gilt market is there on your screen. UK, United Kingdom 2-year, I can see that's on the move. We have yields going higher, so we've got selling of gilts taking place. So across Europe, there does seem to be some concerted reaction to what we saw from the Fed, whether that's in equity markets or in sovereign bonds. And we've got a little bit of movement in the franc there. We'll keep an eye on the Swiss franc as we get an SNB decision later on this hour, just in around half an hour's time. Let's get more on our top story then. The Fed meeting yesterday. There was no change in policy, of course, but officials are inching towards tapering and see 2 rate hikes by the end of 2023. We're joined now by Peter Kinsella, Global Head of FX Strategy at Union Bancaire Privé, and he's with us now. Peter, good morning to you. Good to speak to you. How significant was the Fed event of yesterday then? Either the dot plots or Powell's statement, how significant was it? Did it give you reason to really rethink the time horizons that you're attaching to various events?
Yeah, I think it was significant, and I think it's significant in the context that, you know, we'd largely priced in, I'm guessing, sort of 2 rate hikes by the end of 23, and markets had it if you look at Fed fund futures. However, it was a pretty big shift to go from 0 predicted rate hikes from the Fed itself, all of a sudden then going towards 2 by 2023. So I think it kind of shocked the market in the sense of the scale of the change from on the dot plot, and indeed as well, I think that the rise in the core inflation prediction going from sort of up to 3% this year, and then coming off the following year, that was also taken as a bit of a shock, and consequently you've seen obviously very big moves in equity markets and of course in bond markets. Overall, I think it's a pretty big deal, but we are still of course waiting to see what they're going to do on tapering, and I guess we're going to find out a bit more about that at the Jackson Hole Summit.
We might find out more at Jackson Hole, absolutely, in terms of the timescale then around tapering, because what they've acknowledged is they're just talking about tapering right now. In terms of risk assets then, Peter, we already have seen, of course, some reaction in some risk assets. Where does your mind go when you think about where we're going to see risk assets most vulnerable from a hawkish Fed? What do you think of?
Well, I suppose obviously your kind of your growth style assets are the ones that'll take the most pressure, right? So obviously sort of some of the tech names. I think if you look at in particular big tech, however, that doesn't seem to be as grossly overvalued as it was previously, and their earning profile has been pretty good. So I don't think they're going to be grossly affected. Really, it's just a question of just taking a little bit of I would say a pullback, a little bit of a breather in most risky assets before we sort of we get back on track. And I think certainly investors should gain some sort of comfort from the fact that the Fed is looking at unemployment being at 4.5%, very strong growth numbers, and of course a very strong sort of employment backdrop. That's a good combination for equities. And let's face it, look, if the Fed raises rates by 50 bips and we get up towards 0.75%, it's still an incredibly low sort of low Fed profile, and indeed it's still a negative real rate profile. So still a very sort of, I would say, decent and constructive mix for investors over the longer term.
Okay, so there is something that some continuity in that sense. Let me ask you about inflation expectations a little more specifically then. I was looking at a chart of the number of Fed members who see upside risk in core PCE, and this, of course, is the Fed's measure of inflation. It's the one they care about, and it does seem as if that there is clearly a huge build-up in expectations for upside for core PCE. Now, this doesn't tell you anything about whether this will be transitory or not, I suppose, and that conversation will still run, won't it?
Yeah, it will. I mean, look, I think this investors and indeed sort of the wider public probably need to take a more sanguine view on inflation. And what I mean by that is if you look at the Fed, the ECB, all of the central banks, for the last decade, they've gotten inflation wrong. Okay, and consequently, where all this confidence is that they're suddenly going to be able to perfectly predict what's happening with inflation, it doesn't really strike me as being sort of very very accurate. So I think yes, we may get a slight bump higher in inflation, both in headline and core this year and next. However, in the absence of sustained rises in wage growth, I really struggle to see where the big rises in sort of inflation are going to come from. So sure, I think we have this sort of transitory mix of bottleneck style supply side inflation following the pandemic, and then a little bit of a release of pent up demand following the pandemic and people getting out spending money again. That is both of those are going to dissipate. I think we'll be back towards pretty low inflation numbers within a year and a half.
We are seeing a little bit of movement in European bank stocks, just looking down and seeing a few of them moving to the upside. And we certainly see that fixed income markets here in Europe are busy factoring in this perhaps surprise hawkishness from the Federal Reserve. What kind of read across do you think this has into European assets then, Peter? In fact, we saw a number of banks deciding to change their stance when it came to the euro on the result of all of this. I think Goldman Sachs and Deutsche Bank abandoning bullish views on the euro. What rethinking are you doing on the single currency?
Well, certainly on the single currency, I think it'll probably cap aggressive upside in the short term. So certainly anybody looking for levels of 125, 126 by the end of the summer, that now looks quite unlikely. That said, I'm not yet ready to pull the plug on the bearish dollar view in the context that you've still got a very, very rapidly widening and deteriorating trade deficit in the States. That's feeding through to a huge current account deficit. So, that's going to put pressure on the dollar as it normally and naturally does. So certainly, I think in the short term, the suggested rate hikes will prevent aggressive euro appreciation. But I'm not going to throw in the towel yet on my bearish dollar call just quite yet.
Okay, interesting stuff. We'll pick up on the other side of some of those dollar trades in just a moment then, Peter. Thank you. Peter Kinsella from Union Bancaire Privé stays with us on the programme. Coming up, the ruble jumps. We'll look at the impact of the Biden-Putin meeting and what else is driving the Russian currency. We've seen a tick up in oil prices of late. We'll get that into the mix as well. This is Bloomberg.
countries that entered this crisis with limited fiscal space, with more vulnerabilities, need to be supported for the benefit of the world.
The transparency of the debt burden for the poorest countries needs to be increased. There needs to be fuller disclosure.
Welcome back to the European Market Open. 10 minutes into our European trading session, Thursday's session, the day after the Fed. And this is what we see on European equity markets moving to the downside. Banks doing well on the back of higher rate expectations. Miners doing badly on the back of that stronger dollar. Let's get to some of the individual movers. Bloomberg's Danny Berger has a breakdown. Danny.
And CureVac listed in Germany, which of course has less volume than their U.S. listing. Despite that, really reflecting the post-market drop we saw in the U.S. shares, it's now lost about half of its value so far in today's trade. They just released their vaccine study. The data was disappointing, only prevented about 47% of COVID symptoms in this vaccine study. Also looking at Whitbread this morning, one of the biggest gainers, up almost 4% so far, releasing earnings. 98% of their hotels in the UK are now open. You can go stay there. The company seems very confident that once the lockdown is over, which by most parts it is, that they can really thrive. Finally, Deutsche Bank, Anna, you mentioned this, the banking sector just doing very well today, reflecting some of that move we saw in the U.S. and U.S. yields. Now, I want to look at that move even closer because after yesterday's gut punch reaction, that move higher in yields, it is a very subdued day in U.S. yield land. You have the 5-year yield after a huge surge we saw more or less just kind of hovering around its level. It's down by about a basis point. You have 10-year break-evens doing something similar after we saw a lot of bets come off over higher inflation in the U.S. But still, the winner for the day is a bullish dollar bet. You can see there the euro dollar still below 1.2, now below 1.199. So yes, we're continuing to see the Fed allowing those dollar bulls to take over, both Deutsche Bank and Goldman Sachs abandoning their short call on the dollar. Anna?
Danny, thanks very much. Yeah, absolutely. Yeah, interesting stuff there when it comes to those euro calls. Danny Berger with some of the market reaction then we've seen and the individual movers on our radar this morning. Now, the ruble rose yesterday. That's after Joe Biden and Vladimir Putin agreed to return their respective ambassadors to Moscow and Washington. Our guest says that the ruble will continue to benefit from reduced US-Russia tensions. Let's get into that conversation then now. Peter Kinsella joins us from Union Bancaire Privé. And it's really interesting to think about the extent to which the ruble has been held back by geopolitical tensions and the sanctions environment that we've seen between the US and Russia, Peter. And you make the point that the ruble has not kept pace with a rising oil price. Do you think now the ruble is freer to keep pace with that rising oil price?
I really do. I think a few things really on the ruble. The first is that it does trade very, very cheaply compared to where oil is and indeed to where its terms of trade are. So certainly the ruble does appear cheap, compared to what it normally does. I think that's been held back to an extent by, if you look at broader EM currency moves, but also it's been held back certainly by geopolitical tensions. The fact that we've seen sort of Biden and Putin meeting yesterday, I think it's a very, very good sign. We have had a situation where the relationship between both of these, very large powers has been very, very poor for quite some time. And, being able to agree to disagree on certain aspects and then also sort of to look for cooperation on areas of mutual concern. Look, that's the start of hopefully an improving relationship, and I think that can only be good for the ruble at this point. And then, of course, you've got the Central Bank of Russia, which is raising rates and is likely to continue raising rates over the remainder of the year. So I think the ruble is going to benefit from this, this, I would say, this aspect of higher carry, of better valuation and improving valuation profile, and of course then from the improvement in geopolitical risks. So it's there's nothing really not to dislike. There's nothing a lot to like about the ruble at this stage.
Okay, and Peter, we are working our way 15, 16 minutes away from a rate decision from the Swiss central bank. What should we be watching out for when we hear then at 8:30 UK time from the SNB?
Yeah, I don't think we should really expect too much. It's they're obviously going to leave depot rates on hold at minus 75 bips. I think that they will, of course, mention that the franc remains highly valued, but they're not really going to do anything else at this stage. And certainly markets haven't priced anything in. I think certainly given the fact that you've got this very low inflation profile in Switzerland and indeed elsewhere in Europe, there's no reason I think really for the SNB to further reduce its depot rate at this stage. It would be unnecessary and I think at this point probably counterproductive. I think what's interesting on the SNB side is that they're kind of, if you look at the sight deposits, they've increased in recent weeks, which does imply that we're starting to see the return of capital inflows towards Switzerland. And of course, that's going to put some appreciation pressure on the franc.
Okay, so that's what to watch out for or not when it comes to 8:30. We also have rate decisions from the Turkish Central Bank and a few others. In terms of the Turkish story, the inflation prints, some of them have been lower than anticipated, even when they are quite high, Peter. How is that changing the narrative?
Well, I think really on Turkey, given the various idiosyncrasies we have over there with the governmental control of the central bank, etc., we've had a slightly smaller inflation print in Turkey at the last time recalling. However, you still got a year-on-year inflation print in the region of 16.5% on the headline, which is of course a very, very elevated level. And the fact that we've seen President Erdogan indicating his sort of his displeasure with high rates and the need for lower rates, particularly earlier in the summer, it does indicate that we're going to see eventually a lower central bank rate profile. And of course, that's not going to be good news for the lira. So I do think there is a tail risk for dollar lira to the upside, and I'm pretty convinced that we're going to see it trading, closer to levels of around 9 by the end of the year.
Peter, thanks very much. Really good to speak to you. Peter Kinsella, Global Head of FX Strategy at Union Bancaire Privée. Thanks for joining us here on the European Market Open. Inflation is in focus, as we were just referencing there with Peter. We've got central banks coming up. While the Feds may be dominating the conversation, other central banks are in the mix. There are some other key rate decisions due today. Things to keep an eye on. Switzerland, as we said, coming in 13 minutes' time. A little bit later on, we expect Norway and Turkey also to set interest rates. The SNB has the lowest rate in the world at negative 75 basis points. As we were talking with Peter there, it's likely to stay that way. Swiss CPI is still under 1%. Norway is expected to keep rates unchanged at 0%. Watch out for guidance, though, over in Norway, as the Norges Bank has signalled a hike in September. And finally, Turkey is out at noon. The decision comes 3 weeks after President Erdogan fired another senior member of the central bank team. Expect them to hold at 19% for now. That's the story then when it comes to central banking. And we will be continuing the conversation on that with the SNB Governor, Thomas Jordan. That is at 10 a.m. UK time. And the Norges Bank Governor, Øystein Olsen, also joining the programme, 11:30 a.m. UK time. Let's get a Bloomberg Business Flash. Top corporate stories we're covering today here at Bloomberg. Here's Juliette Sally.
Anna, the US Justice Department is suing to stop Aon's proposed $30 billion acquisition of I. Willis Towers Watson. The government argues that a merger between two of the world's largest insurance brokers could eliminate competition. The case marks the first lawsuit by the Justice Department to stop a merger under the Biden administration. Shares of both companies tumbled on the news. The owner of coconut water company Vita Coco is planning to go public this year after investors rushed to back Oatly's IPO. This according to Bloomberg sources. The company could be valued at more than $2 billion as the global wellness market continues to grow. The world's biggest securities firms and banks are still struggling to retain junior investment bankers in Asia, challenging their expansion plans for a region that is growing faster than anywhere else in the world. JP Morgan's China CEO has highlighted the issue.
The whole industry is running into a pretty big supply-demand issue. And I don't think this is going to be alleviated anytime soon.
And that is your Bloomberg Business Flash. Anna.
Juliet, thanks very much. Juliet Sarli there in Singapore. Coming up on this programme, a spate of unusual crimes is catching the eye of law enforcement across the world. In today's Big Take, we look at the commodity theft boom driven by the spiralling price of raw materials. All that next. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Open 22 minutes into a negative session for European equity markets. Banks getting some support from what we heard from the Fed, but elsewhere we are seeing a little bit of weakness across these European equities. Not so maybe in Germany, the Z2 DAX a little bit more resilient. Now, police the world over are tackling an unusual crime wave as criminals cash in on surging commodity prices. Thefts of catalytic converters in Europe have soared. In Chile, copper has become too valuable for gangs to resist. And in Canada, authorities are investigating a dramatic spike in timber heists after a home building boom tripled the price of lumber from a year ago. Joining us now is Agnieszka de Souza, commodities reporter and the author of today's Big Take story. Good morning to you, Agnieszka. So we just painted a picture of something very global based on commodity prices booming. Tell us more about what's happening.
Yeah, good morning. So commodity crime, that's been with us for centuries. We've heard about this before. They are so ubiquitous. After all, they're an easy target. But what is so unusual right now, we're hearing about this increase in all sorts of crimes related to commodities. I'm hearing it from experts and law enforcement agencies and victims themselves. And as you said, you know, from Canada to Nigeria to Malaysia, all over the world. And it can involve all sorts of crime, from pure and simple theft to hijacking of cargo to more sophisticated activities like food fraud, you know, which can involve adulteration, faking prices, and so on. So it's yeah, it's very broad.
Yes, I know plenty of people who had to fit catalytic converter locks to cars as a result of some of this, but that's just one example of this big global theme you're talking about. Why has this boomed then, Agnieszka, during the pandemic?
Yeah, it's a combination of factors. Yes, soaring prices certainly provide a huge incentive to do it. I mean, it's not just traders and bankers or economists that follow commodity prices. And at the same time, we've got this enormous impact from the pandemic. You know, supply chains are being disrupted, borders reopen and close. You know, police resources are being diverted. You know, when it comes to food or ports, you know, inspectors cannot come and visit sites. And then you've got this economic hit, and in poorer countries where, you know, food insecurity may be on the rise, that actually leads you know, to desperation as well. So it is all in all a fertile ground.
And briefly, Agnieszka, how are companies then coping with this?
Well, all sorts of companies are affected. So from small businesses could, you know, be installing going after simple measures like security cameras and security guards, but it gets more complicated the bigger the company gets. So if you have, you know, sophisticated supply chains, you know, companies are trying to analyze their risks, finding loopholes in them, and trying to address them.
Agnieszka, thank you very much. Bloomberg's food and agriculture reporter, Agnieszka de Souza. If you want to read her full Big Take story, NI Big Take Go is the function to use on the Bloomberg. Up next, an exclusive conversation with former UK Prime Minister Gordon Brown. We'll talk global cooperation. In the wake of the G7, we'll talk about tax and the tax changes that the G7 recommended. We'll talk about the global economy and climate change, get his thoughts on all of that. He also has a new book, 7 Ways to Change the World. So we'll get the top line on what his messaging is at this point. European equity markets then, as we are just approaching 27 minutes into our trading session, on the back foot, down by 0.25% this morning. The banking sector getting a bit of a boost from the higher rate expectations that are sort of rippling through markets as a result of the hawkishness we heard from the Fed last night. A little bit of a surprise to some, the extent to which we saw those dots from the Fed move. That's moving through the markets this morning here in Europe. This is Bloomberg.
We've sadly lost 12,000 premises across the sector as a whole. We lost about 330,000 additional staff in terms of headcount through the pandemic. It is a gradual road to recovery, but I am feeling much more optimistic. The positive response we've seen from consumers in returning to eating and drinking out, even outside, has been very welcome. And of course, we're not out of the woods yet, because we know that about 20% will struggle to reopen with social distancing restrictions, and every day that they are closed makes it less likely that they'll be able to reopen. So I think you will see continued business failures within hospitality over the course of the next year. Well, I think the government support has been unprecedented. Equally unprecedented is the hit that hospitality has taken. So we do need the government to look at a solution on rents. which is going to be critical to recovery, a recapitalization strategy to tackle the levels of debt that these businesses are going to come out of the pandemic with. So this government support, fantastic, has allowed us to maintain a large number of staff that we would have undoubtedly lost along the way had we not had furlough. But furlough actually is costing the businesses to implement at the moment, and the costs of staying closed, the industry is burning through £500 million a month in ongoing costs.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Welcome back to the European Market Open. Half an hour into our European equity trading session, and we see a little bit of weakness in the London market. The basic resources sector and utilities, the biggest fallers this morning, and perhaps that weighing on London just a little bit flatter on the DAX and the CAC 40. So overall, not too much damage being done by the slightly more hawkish Fed than many had anticipated that we saw yesterday, as shown in the dot plot from the Fed and the commentary from Jerome Powell, perhaps around labour markets. So banks to the upside. Travel and leisure also moving higher. And we do see slightly more sectors in red than in green. Let me just get to some breaking news. We were waiting for the SNB, the Swiss National Bank, to announce its policy decision, maintaining interest rates at negative 75 basis points, so 0.75%. Says the franc remains highly valued, and we had a heads up on this from Peter Kinsella a little bit earlier on, and he was suggesting just that we would get no change in the rate from the SNB, and that the SNB would continue to emphasize that they thought that the Swiss franc was overvalued. So pretty much as expected, it would seem there. Going on to say that the Swiss GDP can be expected to show strong growth in the second quarter. We'll keep across all these lines as they come through from the Swiss Central Bank. And of course, remember, we'll be talking to the SNB Governor, Thomas Jordan. He will be joining us at 10 a.m. UK time, so in around an hour and a half. Right here, though, right now on this programme, a very interesting conversation for us. My next guest was Prime Minister of the United Kingdom from 2007 to 2010, where he introduced rescue packages during the financial crisis. Before that, he was Chancellor of the Exchequer for a decade, the longest-serving holder of that office in modern history. I'm very pleased to welcome Gordon Brown to the programme. Gordon Brown, very nice to speak to you. And I wonder if we can start our conversation thinking about global cooperation and the need for it. Because, of course, at the time when you were UK Prime Minister, we saw a great deal of global cooperation in arguably saving the global financial system. How would you characterise levels of global cooperation that we see now?
Still very poor. I think President Biden has ushered in a new era where people want to cooperate, but I think the lesson of the G7 is that they stopped short of doing what was necessary for both the recovery from COVID and the economic recovery. So we should have had a plan to mass vaccinate the world. Instead, we had the gift of 1 billion doses when we need 11 billion doses. So one of the problems I think every economy is going to face over the next few months is that the disease will continue to spread and mutate, and it will be in danger of coming back to haunt us in further waves. So I think over the next few months, there's a real premium on policy leaders across the world getting a grip on the COVID vaccination program, stepping it up, creating a virtuous circle where you underwrite the funding of further capacity being developed in the system, and we cover the whole world. I think that's actually the priority for economic recovery as well.
That's the priority for economic recovery. You're clearly disappointed then with the commitments we saw at the G7 on this front. Should we be waiving patents, or do you see that as a bit of a red herring? Is that or is that not the secret to increasing production as quickly as possible?
Well, we have to transfer technology so that we can have production in different continents, and there could be licensing agreements and indeed a temporary waiver, but that was not on the agenda at the G7. I think perhaps more important is underwriting the financing of vaccines. because we have to create far more vaccines. We have to put up the money. The G7 is the richest group in the world. It had the chance to do it. If it's not going to do it, I don't know who will. So I think we're going to have increased pressure in the months leading up to the G20 in October, where I hope a decision will be made to finance the vaccination program. Now, of course, in 2009, we were dealing with an economic crisis that had economic causes. We're dealing with an economic crisis that got medical causes. And of course, there's many things to do on the economy as well. But first things first, you've got to give people confidence that we've got this virus under control, and indeed new mutations and variants, like from Nepal or India or Africa, under control, because it's a matter of self-interest for every advanced economy as well. If we don't solve it everywhere, we won't solve it anywhere.
Something else coming out of the G7, of course, an agreement on global taxation, international tax, a very high-level agreement, a lot of detail yet to be worked out. Do you think, in the end, this will result in multinationals paying very different levels of tax, higher taxes for the tech sector, for example?
I think the devil is in the detail here. Look, the principle is good. We tried this in 2009. It was actually China that was against us taking action then. We've now got an agreement on a minimum corporate tax rate, but I think there's one or two problems with the proposals that I see. I think 15% is too low. I think Joe Biden was right. It should have been over 20%, because then there would be no incentive to move your company to a nameplate destination in the Seychelles or St. Kitts or something. I think, secondly, there seems to be a number of waivers that help companies like Amazon. And thirdly, of course, it's not yet clear that the profits will be charged against the place of economic activity. And I think that's still a weakness of the plan. So a lot more work has got to be done. But it is a breakthrough to get a global minimum corporate tax rate. And it is necessary, despite what people say, because so much money has been lost to tax havens. I actually write about this in the book I've just done, 7 Ways to Change the World. We really have to sort this out, because the exchequers of poorer countries as well as richer countries are being deprived of large amounts of revenue that could be used to pay for health and other public services.
Yes, you mentioned this book then, 7 Ways to Change the World. Now, I was reading some of the reviews of it. Former Governor of the Bank of England, Mark Carney, describes you as a person of action, Gordon Brown. I wonder, what is the action that you recommend that comes out of this book?
Well, I think, look, leadership is about two things when you've got a crisis. You've got to get to the root of the problem, and that's why I'm emphasizing this is a medical problem that's caused an economic disaster. And secondly, you've got to be 1 or 2 steps ahead, preferably 2 or 3 steps ahead of events. And I feel that around the world, in terms of global cooperation, we've been behind the curve at almost every point, and we've acted too late. So when it comes to the other issues we face, climate change, we've got the COP26 in October and November. It's not yet clear that the groundwork has been done for that. Discussions between President Putin and President Biden yesterday on nuclear proliferation, amongst other things. Again, I think we're behind the curve on that, because we've got great power rivalries, but we've also got a build-up of nuclear weapons. So leadership is about getting ahead of the issue, and I think on all these issues, we need to get people around the table more effectively. Probably the G20 is the most effective instrument for the economy, and indeed perhaps for the groundwork for the COP26 on climate change. And I think people are feeling their way towards greater cooperation. We know what's wrong, but we haven't done enough to put things right.
In terms of the climate change agenda, clearly that's very high on the agenda for many governments, and the UK very focused on it because of the COP meeting taking place in Scotland a little bit later on this year. What would you be doing that the government is not already doing? They clearly have high ambitions. Some of the detail about delivery may be missing. So what would you be doing?
Yeah, I think there's 2 things that are really important here. The first is everybody's targets are very long into the future. So it's perfectly easy in a way for a politician to announce something for net carbon zero 2050, or in China's case, 2060. What we don't have is a ratcheting up of the ambition for the next 5 years and the next 10 years yet. And I think unless that happens in the next few weeks and months before COP26, it will not be seen as a success. Clearly, if we don't ramp up our reduction of carbon in the economy in the next year or 2, we will not meet any intermediate target for 2030 or 2035. So we need immediate commitments, and that's why a green recovery is on the agenda. I think the second thing, which I think the G7 failed on at the weekend, is that, remember, this is a conference of 194 countries. It's not the G20 when 20 big economies can just push their decisions on everybody else. You're going to have to get consent from the other countries, particularly the coastal states who are hit by climate change and the poorest countries. Now, the promise of a climate change fund of 100 billion, which was made in 2009 actually, has not yet been delivered in 2020. And this is a breach of faith that with the poorest countries and the coastal states. And unless we can sort that out, and the next stage of that, which is 100 billion a year for mitigation and adaptation, I don't think you'll find that the countries that have got most to lose here, the poorest countries and the coastal states, will be very enamored as they come to COP26. That's got to be sorted out beforehand. I'm confident, by the way, that John Kerry is doing a great job as the American climate change envoy, but I think we need a coming together of the major powers to make that offer of the climate change fund being made up to 100 billion.
Okay, on another subject, I mean, we've talked about the need for cooperation and the role that these supranational bodies are playing at this time. You're a bit disappointed with, or disappointed with what we heard from the G7, it would seem. A little closer to home, we're maybe seeing fracturing rather than coming together, with calls for Scottish independence, of course, still very loud in Scotland from the SNP. I wonder if you think, just to finish off, Gordon Brown, is there something that can be done, a re-evaluation of the level of devolution that can be done with a view to saving the union?
Yeah, I think we've got to remember political nationalism is a phenomenon right across the West, right from Canada, right across to Hungary and Poland, where nationalist parties have become very prominent. I think in Britain's case, there's a level of dissatisfaction from Wales, from the regions of England and from Scotland about the centralisation of power in our country, that people don't feel they're consulted, don't feel they're listened to. Some people feel they're treated as second-class citizens. So I think a review of the whole British Constitution, the last one took place more than 50 years ago, is necessary. And I think if we did that, we could probably prove that the cooperation that we've seen in delivering the vaccination program in Britain, which has been national and local cooperation, could be repeated in many other areas and make people convinced that working together is better than working in isolation, particularly when you've got neighbouring countries in the same island fighting each other. It's no future, in my view, for a world that needs cooperation and needs people to be able to work together to solve problems that can't be solved on your own.
Gordon Brown, thank you very much for giving us your time this morning. Thanks for bringing us the sunshine of Fife as well. Gordon Brown, former UK Prime Minister and author of a new book, 7 Ways to Change the World. Thanks very much for joining us. Coming up then on this programme, we'll be back to the central banking conversation with highlights from our conversation with the ECB's Philip Lane. He tells us the central bank doesn't have a fixed volume approach when it comes to the emergency bond buying programme, the PEP programme that the ECB introduced at the height of the global pandemic. We'll bring you our exclusive interview next. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Welcome back to the European Market Open. 44 minutes into our European equity session that looks negative. For London in particular, the FTSE 100 down by 0.3%. We're flatter on the DAX and the CAC. Let's get a Bloomberg First Word News update. For that, here's Juliet Sarli in Singapore.
Anna, Juneteenth will become a federal holiday in the United States. The date recognizes the emancipation of Black Americans from slavery. President Biden will sign the bill into law on Thursday in an event in the White House with remarks from the President and Vice President Harris. Hong Kong National Security Police have arrested 5 executives of the pro-democracy Apple Daily newspaper for suspected breaches of the national security law. This as the government escalates its case against activist and media tycoon Jimmy Lai. Lai is serving a 20-month sentence for his role in an October 2019 protest. Well, for the first time in 5 years, China has sent astronauts into space. The 3-man crew is scheduled to plan to spend 3 months in a new space station. They'll conduct experiments and test equipment. China's first crewed space mission took place in 2003. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Anna.
Juliet, thanks so much. Juliet Sarli there in Singapore. Now, the ECB chief economist, Philip Lane, has told Bloomberg that the bank doesn't have a fixed volume approach when it comes to the emergency bond buying PEP program. Speaking exclusively with Bloomberg's Paul Gordon, he added that it will take a long time for the euro area labour market to fully recover.
I think it's very important to recall that, of course, the pandemic is global. But in the end, where the US is today and where the euro area is are so different, both in terms of the stage in the pandemic recovery, in terms of the reopening of the economy, but also in terms of the wider inflation dynamic. And fundamentally, there's a few days difference in these meetings. Last week, we had an assessment where inflation, even if it's a little bit high right now, is going to converge back to 1.4 in 2023. So a low inflation medium-term pressure, and the Fed has a very different medium-term outlook. And that difference in medium-term outlook really just means we can't spend too much time trying to compare central bank priorities on both sides of the Atlantic. We just are in a very different phase to the Fed.
I mean, the Fed noted that inflation has been stronger than expected. The readings in the Eurozone have also been stronger than expected. I'm aware your forecasts don't see it holding above target, but there was always the risk that there are surprises that start to seep into expectations. Your colleague, Robert Holtzmann, the Austrian central bank governor, said at 3% inflation, the ECB would have to react, though he didn't say what that reaction would be. Would you agree with that kind of a threshold?
So, of course, I mean, what's been interesting is, of course, everyone is thinking more generally about inflation these days. But when you start to kind of analyze it, the conditions under which those famous second-round effects might actually take hold, that we may actually see them in the data, are really most likely with a very strong labour market. And going back to that basic point, the basic difference between the European debate and the US debate is we have if you like, a general measure of unemployment, which is around 15%. It's very difficult when you have unemployment so high to see very strong wage pressure. And the wage negotiations we do see are coming in low, which is not surprising given the slack in the labour market. So the narrative of this second round dynamic Of course, we look at it, we monitor it, but you actually have to see it converted into wage decisions and pricing decisions, and we don't see it so far. And the economics of it is we know it's going to take a long time for the labour market to fully recover. And without that full recovery, the kind of bargaining strength to compensate for, if you like, rising prices, and without that dynamic, it's very hard to sustain that narrative.
That was the ECB chief economist Philip Lane speaking exclusively to Bloomberg, to my colleague Paul Gordon, on the bank's pandemic recovery strategy. Coming up on this program, we get back to covering all of the action from yesterday's Fed meeting. It was yesterday's meeting in the US, but certainly having an impact on today's markets here in Europe as the central bank moves forward its rate hike forecast. That was certainly the messaging we got from the dots anyway. Let's get into that conversation next. This is Bloomberg.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
But you can think of this meeting that we had as the talking about meeting, if you like. And I now suggest that we retire that term, which has served its purpose well, I think.
Fed Chair Jerome Powell speaking a language the market understands, calling it the talking about tapering meeting. At the central bank's press conference, that was yesterday, of course, the impact on European equity markets today. Clear to see European equity markets move to the downside. Interesting to see, though, that we're maybe off lows in some of these equity markets in Europe. US futures, though, still pointing quite substantially lower, 0.6% lower on NASDAQ futures, 0.4 on E-minis and Dow futures. Let's get to Laura Cooper, Bloomberg Markets Live macro strategist. And one sector, good morning, Laura, one sector where we really do see the impact from the Fed yesterday is on the banking sector. Banking stocks doing pretty well this morning.
And unsurprisingly so, just given the fact that we are seeing bonds come under pressure, and that's as markets are recalibrating these expectations about the future monetary policy, not just coming from the Fed, but potentially other central bankers. Because I think what we saw yesterday from the Fed was, the surprise shift that they are laying the foundation for a policy pivot. Yes, we can't read read too much into the dots. That's not really a set timeline, but the fact that they're hinting at potential upside inflation risks, they are sounding quite upbeat on that labor market recovery. I think markets are just kind of calibrating to that expectation now.
And then, of course, you start thinking about, well, where does this lead other central banks? Our colleague Mark Cudmore telling me earlier it's the Fed that's out of step, not the other central banks. But certainly the ECB is behind the Fed when it comes to this, and rightly so. Philip Lane told us, because the US and Euro areas are in very different situations. What did you make of Philip Lane's playing down of the importance then of September?
And that really was the key messaging coming from Chief Economist Philip Lane this morning, is the fact that, look, you know, the conditions in Europe are exceptionally different from the Fed, not just those inflation dynamics, but also when we look at the different stage of the growth recovery. So the comments from him this morning were quite soothing, basically saying that pandemic emergency purchases remains quite flexible. Yes, we could see rates volatility over the summer, but they're going to step in to keep those financial conditions accommodative, and they still see inflation pressures as transitory. And September is likely too premature to even discuss tapering. So clearly this divergence is emerging across both sides of the Atlantic.
And in terms of the read across or spillover of the Fed's increasing hawkishness into various assets, I know on the Markets Live blog you've been asking this question today: which risk assets are most vulnerable post the Fed? We've seen some of that vulnerability in emerging markets exposed already. Where are the answers sort of gathering?
Well, and I think the conditions this time around for emerging markets are quite different than what we saw back in the taper tantrum of 2013. The Fed is really going to signal this time well in advance of material policy moves, even though it's starting to lay the foundation. But I would expect that where we are seeing the most reaction is in the dollar. So it bounced about 1% yesterday, the most in a year. And that's as we really saw quite a move in terms of those real yields. So against that backdrop, if we look at those low-yielding funding currencies like the euro, like the Swiss franc, like the yen, I would expect that we're going to see those currencies come under pressure, because really, I think this really opens the door for potential dollar to gain further upside.
Yeah, Laura, thank you very much. Laura Cooper, Bloomberg Markets Live macro strategist. The dollar gaining, of course, in the wake of that Fed hawkishness, and continues to hold gains and gain further. The dollar index up by 0.6% on my screen this morning. The Bloomberg dollar index up by 0.3%. US equity markets, as I mentioned earlier, futures suggest some downside there, in particular the Nasdaq. Interesting that the Nasdaq was actually not the biggest losing sector in yesterday's losing market in yesterday's US session. You might have thought that more of that weakness might fall on the tech sector, but some of that was unwound. And we do see, though, that US equity market futures point to the downside for this Thursday. That is it for the European Market Open. Surveillance early edition is up next. They'll continue to take you through this post-Fed market story. This is Bloomberg.
We're now in the early stages of a sustainability revolution.
The battery problem may
be the biggest unsolved problem in all of technology.
Every time the United States has done great transformative things, there's been a partnership between government and the private sector.
With a willing partner to ensure competitiveness and draw in investment in the United States, Canada's going to be able to be even more ambitious.
The objective for Glasgow, first and foremost, is to keep that 1.5 degree temperature rise within reach.
The train has left the station. Investors care about it. People who work inside of corporate America care about these issues. And certainly we see that with just the broader community.
There's not enough tax in the world for private sector to pay for all of this. It's going to have to be a public-private partnership.
I made it clear to President Putin that we'll continue to raise issues of fundamental human rights, because that's what we are.
Liftoff is well into the future. The conditions for liftoff we're very far from maximum employment, for example.
And I'm so very pleased that now we have the G7 coming up with support for about $100 billion redirected from countries with strong reserve positions to countries that need help.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition on this Thursday, the 17th of June. I'm Francine Lacqua here in London, and here's what's coming up on today's program. The Federal Reserve shocks markets by moving forward its rate hike forecast. It now sees 2 increases by the end of 2023. The dollar jumps. ECB chief economist Philip Lane plays down expectations for taper talk at September's meeting, saying it's too early to discuss an end to PEP. More from our exclusive interview. And Joe Biden and Vladimir Putin agreed to work on arms control after their meeting in Geneva, but differences and tensions remain over human rights and the recent spate of cyber attacks. So good morning, everyone. Of course, this is our top story. Jay Powell and his colleagues at the Federal Reserve surprised markets at yesterday's meeting. Now, the U.S. central bank held policy steady as expected, but moved forward its rate hike forecast, predicting 2 increases by the end of 2023 as the economy recovers. Now, Powell also raised the possibility that the transitory inflation that the U.S. is experiencing may actually last a little bit longer than he'd previously expected. Well, here's how Bloomberg TV guests reacted to the announcement.
The earliest we're going to get an announcement is probably September on tapering. And then based on history, we shouldn't expect any real action until we get into the late first quarter or to the this early second quarter of next year. And then it'll probably take them about a year to taper.
Inflation and the flare in inflation has come in much stronger than they thought. And I disagree a little bit with Scott, although I love Scott. And, I think, I call it artful dodger when Jay gets up there and talks about, in terms of not committing to quantitative easing and what are they going to do with QE in terms of the tapering.
Well, I think the risk is that they're going to be too slow because they basically said that they're not even going to start to tighten monetary policy until there's 3 conditions met: 2% inflation, they're at full employment, and they're confident inflation is going to move above 2%.
The next meetings, it is all about this shift in the market now having to digest that this is a Fed that is no longer willing to look past, tremendous, substantial further progress and being forced to recognize that substantial further progress, and then the market being forced to recognize What does this mean in terms of no longer having this ever-flowing amount of liquidity?
Now let's bring in our Danny Berger with the very latest. Danny, what does this mean for the markets? I know there was a big move in dollar.
Yeah, huge move in dollar, huge move in the belly of the curve yesterday. Look, we knew going into this that it could be the hawkish surprise that really weighed on markets. That's where the risks were leaning to, and that's what we got. 5-year, of course, not surprising, it was one of the most significant moves, given it's the most sensitive to rate changes in the Fed, and this really does seem like a big attitude shift that they're now focusing on this huge growth coming out of the U.S. So we saw more than 10 basis point move out of the 5-year yesterday. Today, things certainly look more subdued, despite the fact that global bonds also moving in sympathy with what we saw from U.S. yields yesterday. However, today, U.S. yields, dare I say, moving even a little bit lower, but just a basis point, so not major moves here, Francine. Some more digestion, perhaps even some concern that perhaps there could be a policy error here, so not too much movement. Bets on inflation also holding steady as well. But as you say, the real big winner coming out of this and continuing its strength today is the dollar. You can see the euro dollar continues to hold below 1.2. Of course, Philip Lane's words this morning to us saying that September policy meeting, downplaying the importance of it, also weighing on the euro. So Fed Chair Jerome Powell really clearing the way for dollar bulls to absolutely take off late yesterday and this morning, Francine.
Danny, thank you so much. Our Danny Berger there with the very latest, of course, on the move swings on the back of the Fed. We're also getting some breaking news out of the Norges Bank. So the Norway Central Bank actually saying that rates will most likely be raised in September. So that's, again, something else that just adds to the fact that we could see more hawkish central banks across various parts of the world. Now, later this morning, we'll also be speaking to the Norges Bank governor. He's Øystein Olsen. That's at 11:30 a.m. this morning, London time. So it'll be interesting to get more on his take of what he said just minutes ago, saying rates will most likely be raised in September. Meanwhile, the ECB chief economist Philip Lane this morning also played down the central bank's chances of talking about tapering in its September meeting. Now, he spoke with our European central banking editors. He is Paul Gordon about the outlook for the pandemic emergency purchase program.
The decision we made in March to step up remains a good decision. It remains the best guidance. But with PEP, we also have a very strong philosophical design to PEP, which is we're not mechanical in the sense of saying we will do X amount and no more and no less. So the seasonality about the summer, historically, when you say the alternative way of doing QE, say we're going to buy X billion. And then the seasonality factor is easy because you just rearrange. You know August is coming. August comes every year. It's not a surprise. And you rearranged your fixed schedule more in other months, less in August. We don't have a fixed volume approach to PEP. And this is why, the issue about the summer liquidity is secondary, because we want to observe, and we have the day-by-day flexibility, is that there could be investor shocks over the summer in either direction, positive or negative. And so we very philosophically are determined not to kind of express monetary policy as an exact ex-ante volume, but to say we will buy purposely in response to market conditions.
That was the ECB chief economist Philip Lane speaking to our Paul Gordon. Now joining us is Patrick Audier. He's Lambert Audier, senior managing partner, of course, one of the most important banks in Switzerland. So we'll talk to Patrick about the markets, the Fed, and some of the concerns out there in Switzerland. Patrick, thank you so much, as always, for joining us right here on Bloomberg Surveillance Early Edition. First of all, just give me a sense of how you expect the next 12 months to pan out. When you look at markets, when you look at what we heard from the Fed, is there going to be a lot less volatility? And what does it mean for what kind of advice your clients want?
Well, good morning, Francine. It's great to be with you. Yes, we do look at the market in a constructive way, indeed, even though there may be sometimes some surprises. The Fed announcement should not lead to any change in the preset policy of the Fed, I guess. The global economy is in a I would say, in a sweet spot between the aftermath of the COVID crisis and perhaps the first results of the recovery. But progress is underway, and that would definitely lead to a gradual withdrawal of the stimulus policies. Now, this is not to say that there will not be wonderful opportunities to continue to invest, in particular on equities, and we're looking at those opportunities selectively, having, of course, benefited from the rotation between the equity sectors, also, and looking at also perhaps some of the markets, such as the fixed income markets in emerging markets in local currencies, as being good opportunities. But in general, constructive, with expected, of course, reactions of the central banks, depending still on the safety with which they can take those measures, given the circumstances and the progress of the economy globally.
Patrick, when you speak to some of your clients, what are they asking at this kind of juncture in time?
I think the clients, actually, they fear not to be invested rather than to be too much invested. I think they want to take advantage of the positive risk premium on equities. They want to make sure that they can also take advantages of this sector rotation that I was alluding to. And they want also to take advantage of these, I would say, changes in the reallocation of the recovery plans towards the more sustainable economies and sectors. And I think in this respect, we're very well positioned. And at Lombardier, we've been there for 25 years to advise our clients in these sectors.
If you look at some of what the private equity companies are doing, some of what the market's expectation is compared to what the central bank has been saying, is there anything that seems mismatched, or where's the biggest dislocation going to come from?
No, I think I don't think there's huge mismatch. I think we have to be careful about this shift in the situation on the interest rate, and I think this should probably call for some prudence for the fixed income portfolio interested investors, where there, of course, there are specific risks that have to be carefully managed. But in general, still, I expect that the biggest risk is to make sure that is not to be invested, rather to be invested. There's overspending in the world rather than over-indebtedness, and I think in this respect there's ample way to go into further growth of the markets.
In general, Patrick, what does this mean for banking and private banks? So, given where we are in this quite mature market, are you expecting some kind of consolidation to continue in Europe, or maybe even in Switzerland first?
Well, I think there will be consolidation, but probably a little less pressure now than if the rates go up. It will also allow for the financial sector to take more advantage of it. Actually, the financial sector has been in many countries, in particular in Switzerland, at the origin of some of the solutions to the COVID crisis. The banking sector has done correctly, and if not well, during that crisis by doing its job, that is irrigating the economy and also saving and making sure that savings were well protected and guided. That's at least what we're trying to do. So I will see, of course, more consolidation coming in, but not as a shock, much more in an orderly manner as it has been in the past. So no big change in this respect.
Patrick, what about some of the changes that actually the pandemic will bring on, I guess, the economies? Are we going to be able to retrace the suspension of this economy for the last 14 months to go back to the level that we should have been had we not had the pandemic?
Yes, I think we will. The last bit of recovery, of course, takes much longer than the first 90%, and you've seen that already for a few months. I think where it's also interesting is to see that you see now some of the sectors that were the most heaviest hit by the crisis get back on track. That means that there's also some pressure on some prices, and it will have some impact. But I don't think long term this will necessarily be the initiation of a new major trend on inflation.
All right, Patrick, thank you so much. Patrick Audier there of Lombard Odier stays with us. We'll talk also about the trend towards ESG, and we'll, of course, talk about Geneva after President Biden and President Putin met yesterday. Now, Smart Conversations on Surveillance Early Edition. Today, we also speak to the chief executive of one of the world's largest cryptocurrencies exchanges. Jesse Powell of Kraken joins us later in the program. And then, as the British Chamber of Commerce calls on the government to extend its furlough scheme, we speak to the new Director General of one of Britain's leading business organizations, Siobhan Haviland. If you have any questions for any of our guests, just IB plus TV Go. This is Bloomberg.
puts global markets into perspective.
We're going to try to fold an economic theory here with what we've got.
Based on data.
The focus is going to be on the data, the manufacturing data.
How the market responds will be really interesting.
Timely conversations.
Part of getting out of this hole is big fiscal.
Keeping you up to date on trends.
When do you take this thing off?
So you put it on to take it back off.
Wake up with Tom Keene, Jonathan Farrow, and Lisa Abramowitz. Weekday mornings on Bloomberg Television.
What I'm saying is, I think there's a genuine prospect to significantly improve the relations between our two countries without us giving up a single solitary thing based on principle and our values.
Well, that was U.S. President Biden reacting after his meeting with President Putin in Geneva yesterday. Now, the first between the two leaders since Biden took office. Tensions between the two countries have been high for years, with both sides accusing the other of meddling and human rights abuses. Now, both claimed victories from the summit and set the stage for gradually improving relations. I have to say, I covered the summit in Helsinki back in 2018 between President Trump and, of course, President Putin, and it was a different feel, and they also, at the time, did a joint press conference. Yesterday, they split it. Now, Patrick Audier of Lombard Odier is still with us. Lombard Odier, of course, one of Switzerland's largest and oldest private banks, and has been continuously operating for more than 220 years. As of the beginning of this year, it manages some 316 billion Swiss francs of client money as well. So, Patrick, I don't know whether, yesterday, I guess, being based in Switzerland, you actually saw it as a comeback for Geneva, as a kind of neutral ground where world leaders can meet and get down to business.
Yes, Geneva was very happy to welcome this summit. I think this summit was a perfect opportunity also to broadcast positive news in the spirit, i.e. a gathering, a dialogue versus an opposition, and that's really what we could take away from this meeting. Basically, a handshake rather than a sort of a no-go, a willingness to cooperate where we can, and a willingness to also dialogue where there still are some issues of differences. And I think this corresponds to the spirit of Geneva, and it was a positive news for all of us.
Patrick, it seems that we had quite a lot of foreign policy news over the last 4 to 5 days between NATO and, of course, the G7. None of it is really filtering through the markets. So is this bifurcation normal because it's a timeline issue, that the market is more short term and this is longer term, or do you see it just not impacting the way people work and live in the future?
Well, the markets have to do with a sense of trust, of confidence of what's going on. And of course, the markets don't like uncertainties unless correctly utilized short term. So in the longer term, for investors such as we are at Lombard, we're really seeing this evolution as positive. That's why we have and continue to have a constructive view on the markets. We believe that the fact that the G7 is also getting to agreement in areas such as global fiscality is an important step towards cooperation, towards multilateralism. And I think in this respect, avoiding tax wars or other types of commercial wars is always positive to the market. So we do see indeed a return to a more normalized situation in nearly all respects.
So what do you see the relationship between the U.S. and Russia and U.S. and China ending up, and what does that mean for Europe and Switzerland?
Well, there's a harder front between China and the U.S. that has to be dealt with on issues that are well known. We all understand the technology challenges and mastering of the world as well. We understand also that China is becoming a world power with effective influence on many of the ways we do manage our economies in general. We don't want trade to be stopped in any sense, or perhaps trade to go down in any sense if we can. So I think every effort will be concentrating for the benefit of all towards those priorities. And the fact that there may be still some difference of opinion between Russia and the US with this new administration, including perhaps what has been said yesterday, should be a matter of stabilizing rather than destabilizing the overall situation.
Patrick, we also talk a lot about sustainability, of course, and there's a greater appetite from investors to invest in products and invest in companies that are more sustainable. What does it actually mean for a company like Lombardier?
Well, for us, it's a matter of investment conviction. We see these changes of paradigm as affecting us all. I mean, the world economic systems have come to limits. We have to recognize it. The science-based framework tells us where are those limits, which one has been crossed over already, and how we can come back. So we have to set targets, and the financial sector has and can bring its contribution as an accelerator to this transition. We at Lombardier have taken that turn for 25 years already. We are advising our clients to look at the sustainable sectors and investment philosophies as the single most important sources of returns for the future, and also reduction of risks. So it is not only from a fiduciary point of view, a necessary step and changes, of course, that the financial sector will have to make for those who have not yet done it, but it's also a fascinating world in which the opportunities are extremely numerous and interesting to analyze. So it's a fascinating world for the financial sector.
Patrick, where do you see now the next steps? Where do you see the new opportunities? I don't know whether it's battery storage or some of the technology around that, or what we've had so far will just increase threefold or fourfold.
Well, the big challenge that we all will have to go through is the decarbonization of our industries, and that affects practically every industry. So the question is, how do you do it from a financial point of view? And does that mean that you're going to change course in terms of selecting sector? No, it means that you're going to have to analyze which are the sectors that are going to be aligned with the objectives that have been set, for instance, at the Paris conference, and compared to those sectors, which are the companies within those sectors that at best can contribute to that transition and will contribute. If they don't do it now, how can you engage with these companies rather than simply exclude them, which would have lots of collateral damages? How can you engage with these companies to make sure that they get aligned to those objectives? And that's the role of the financial sector, and that will probably offer opportunities in the health sector, of course in the technology sector, but also in construction, mobility, in practically every sector in the world.
Patrick, thanks so much. Patrick Audier there, Lombardier Senior Managing Partner, joining us this morning. Now, Smart Conversations on Surveillance Early Edition continue. Today, we also speak to the Chief Executive of one of the world's largest cryptocurrencies exchanges. Well, Jesse Powell of Kraken and Siobhan Haviland of the BCC join us later in the program. If you have any questions for either of them, both of them, please just IB Plus TV go on the Bloomberg terminal. This is Bloomberg.
exclusive conversation. Coronavirus, vaccines, and what lies ahead. Pfizer Chairman and CEO Albert Bourla, Friday at noon New York time on Bloomberg Television and Radio.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. The dollar index, so the dollar was climbing on the back of what we heard from the Fed. Again, the dollar strengthening as nervousness about U.S. interest rate hikes spread through global markets. We'll have plenty more on that shortly. We also discuss crypto. This is Bloomberg.
Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Well, the Federal Reserve shocks markets by moving forward its rate hike forecast and now sees 2 increases by the end of 2023. The dollar jumps. Joe Biden and Vladimir Putin agreed to work on arms control after their meeting in Geneva, but differences and tensions remain over human rights and the recent spate of cyber attacks. And coming up, we speak to the new Director General of the British Chamber of Commerce, Siobhan Haviland. Up next, though, we speak to the Chief Executive of one of the world's biggest crypto exchanges. That's Jesse Powell of Kraken, and I'm really looking forward to that interview. Well, good morning, everyone, and welcome back to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. So there is quite a lot going on. Let's kick it off with Russia-U.S. tensions that could be the beginning to cool after U.S. President Biden and Russian President Putin met for the first time since Biden took office. Animosity between the two countries has been high for years, with both sides accusing the other of meddling and human rights abuses. Biden now says there's a chance for real progress for the relationship.
I made it clear to President Putin that we'll continue to raise issues of fundamental human rights, because that's what we are, that's who we are.
With regards to return of ambassadors to their workplaces, return of American ambassador to Moscow and our ambassador to Washington, we agreed that they would return to their service.
What I'm saying is, I think there's a genuine prospect to significantly improve the relations between our two countries without us giving up a single solitary thing based on principle and our values.
Let's get to Youssef Gameldin on the ground in Geneva for us. So Youssef, we all watched the press conferences. We all, tried to look at body languages. But I think the most, interesting thing was a throwaway comment from President Biden saying, he's not sure the Russian president will change.
Yeah, I mean, there's a lot to get through, and sometimes it's conflicting indications as well. I mean, the meeting was not even 3 hours long. Going into this, the thinking was it might last 4 to 5 hours, but Biden made it clear that they covered everything they needed to cover, and now it was up to the expanded teams and some of the support staff to do what they need to do to maybe set up another meeting in the future. For the Russian side, this has always been about constructive ambiguity. They didn't really agree with some of the U.S. points around human rights and around cyberspace, but those are points that Biden made very clear that he felt strongly about. But what they could agree on was to reinstate ambassadors, and this is something we talked about quite a bit in the run-up, so that lived up to a relatively low bar going into this meeting, and that's going to help restore diplomatic ties and just get the conversation going. Important quote that struck me: a genuine prospect to significantly improve the relationship. No reset, but an important step forward. Francine?
Youssef, thank you so much. Youssef Gameldin there, live for us in Geneva, of course, on the Biden-Putin summit. Now, let's talk about crypto. This is the interview that we all wanted to do today. Our next guest is Jesse Powell. He is the chief executive of the digital currency exchange Kraken. Now, in terms of trading volume, Kraken is Europe's largest and is the world's fourth largest. Outside the U.S., Kraken is popular because of its margin and futures trading offerings. Earlier this month in the U.S., the company launched its mobile app also to capitalize on retail investors flocking to crypto. Jesse Powell, Kraken chief executive and founder and co-founder, welcome to Bloomberg. And thank you so much for joining us. It's always, great to be part of, some of your journey where you try and understand what crypto will become and what Bitcoin will become. I think last time we spoke, Jesse, it was a pretty volatile day, even for a lot of the cryptocurrencies. We had a sell-off in May. What are some of your clients now asking? Are they trading differently? Are they looking at things a little bit differently?
Yeah, what we're seeing is the people who are selling at these levels are people who have actually acquired these assets in the last year or so. So it's people that are swing traders or new to the market. We see the guys that have been holding for a long time, just continuing to accumulate. And, you see guys like Michael Saylor just sort of backing up the truck, ready to buy as many Bitcoins as he can at any price. So really, we think it's sort of the weak hands, that the people that don't really understand the fundamentals here that are selling the momentum. And, generally we're seeing way more people sign up this year than we have in any prior year. Actually, the first 2 months of the year blew away the numbers for the entirety of 2020. So we just see really here the beginning of mainstream adoption of crypto.
So, Jesse, you don't think there's less enthusiasm, right, for it? Or is there less enthusiasm? You're saying that there's less enthusiasm from people that don't quite understand it.
I think that's right. Yeah, people that just came in for the quick gains, I think those people are also quick to leave when the price starts slipping. But the people that have been here for the fundamental reasons, that understand the true long-term impact of cryptocurrency on the world in DeFi and blockchain technology, those guys are here to stay. They're continuing to accumulate. And I think the people that are selling now, they'll be back when the price is coming up, or when they go to read a white paper and understand what's really going on.
Is there any diminished interest, Jesse, in some of the alternative coins?
I would say so, yeah. So trading has definitely slowed down. We certainly see much more trading when prices are increasing than when they're falling. People tend to sit out the market and wait to see what happens when the prices are coming down. So I would say that there's some less interest. However, there are new amazing coins emerging on a weekly basis that are sort of taking the best of everything out there and doing something new. And there are a lot of new bets to be made in the space, and I don't think the future of sort of which blockchains are going to be the winners in the future is certain at all.
So is it after the Elon Musk tweets where he said, Bitcoin is not green enough, he wants something greener, that you think something else could replace Bitcoin?
I don't see anything replacing Bitcoin at the moment. I think there could be greener alternatives. However, I think Bitcoin is a lot greener than people give it credit for. It is a way to capture a lot of discarded and lost energy. It's a way to bootstrap renewables. So I think it's doing a lot actually for the renewable energy sector. And, I don't know how long Elon has been studying this, but, I think he's got some more studying to do on this topic.
Jesse, one of the other things that I was trying to, and with the help actually of Lynn Thomason on our team, that was helping me look through, there was evidence of these forced liquidations, over-leveraged investors being wiped out in May, especially in the derivatives markets. Has that stabilized now?
In cryptocurrency, I mean, we haven't seen any major sort of wipeout scenarios in the last month and a half. So I would say things are relatively stable in cryptocurrency. I mean, we've pretty much been trading sideways in a narrow range for a while now. So no major market movements wiping anybody out lately.
I mean, there was a Basel committee about 2 weeks ago saying that, cryptocurrencies also threaten financial stability. Have you had conversations with them about Kraken? Do you think, Kraken is safe, or have they asked questions about financial stability?
We're talking to regulators all over the world all the time, and policymakers. It's a constant ongoing conversation, and our policy team is something that we're really heavily staffing up this year. So we want to be involved in more of those conversations and more of them earlier. There's just so much education to do, and every few years these politicians rotate out, and you've got to start the process all over again. So I think there are a lot of misunderstandings in the space. I think that cryptocurrency over time is another major asset class like equities. It's something that will become less volatile over time. I don't see it as something that puts nation states at risk.
Jesse, one of the other things, I mean, we're seeing movements, right, by big companies, even Goldman Sachs, I think, doing some offerings in the crypto space, so looking, for example, at some of the Ether options. Is that a challenge for Kraken? Or does it bring actually cryptocurrencies in the mainstream? So is that a good thing, or do you see it as a rival?
I think it's a good thing. The pie is still growing. There's still very few people involved in cryptocurrency these days. I think a study back in 2018 found that about 100 million people were holding cryptocurrency. I think if we did it again today, we would see many multiples of that, but there's still so much room to grow. Goldman Sachs getting into Bitcoin or getting into Ether, that's just the tip of the iceberg. Kraken trades 60 plus assets with many more on the way. So it's still very early days. I think that a Goldman Sachs or any mega bank getting into cryptocurrency is just growing the size of the pie. It's bringing more people in. There are certain institutional clients who will only trade cryptocurrency through Goldman Sachs, because that's just who they trust. So we don't really see them as a competitor. Ultimately, Kraken owns a full stack exchange service. A lot of that order flow eventually comes through us. It's unlikely Goldman's going to stand up a full exchange to trade cryptocurrency. So likely they'll be routing orders through the existing exchanges, which ultimately comes through us.
Jesse, you're so bullish, of course, on this, and you say this will also displace a lot of fiat currencies. What kind of level could we see in terms of price for Bitcoin, and in what kind of timeline?
Yeah, I'm asked about this all the time. I think it depends on how many more US dollars are going to be printed. and it looks like there's no end in sight to that. So, you know, it's really hard to price things in dollars. We just don't know where the dollar is going to go, really. I'm super bullish on Bitcoin. You know, I think $200,000 a coin by the end of the year is still within reach. You know, I've said one Bitcoin, one Lambo by the end of the year. You know, it may be a Lambo with a fewer options or a smaller engine at this point, but you know, I think we're still looking at very lofty price targets here, and you know, I think we'll see a new all-time high before the end of the year.
Yeah, I bet. I mean, do you get that question like 3 times a day? How often
Pretty
do you
much.
get the question, when are you IPOing? And what kind of valuation are you looking at?
Yeah, so you know, recently we've been in the middle of a financing round, you know, in the ballpark of $20 billion. But you know, so an IPO probably 12 to 18 months out from now, you know, we'd hopefully be looking at something above that. You know, nothing is certain right now. We're on the path. We're doing all the prep work. But yeah, that's another thing that keeps coming. I think people are ready to see another cryptocurrency become a player and get better access to that, which people really don't have right now.
Jesse, do you have valuation targets before you IPO in 12 to 18 months?
No, I mean, it's not really our top, you know, concern. We're just sort of, you know, on a mission to bring crypto to the world, and our valuation hopefully will be a reflection of our success in achieving that mission.
Jesse, thank you so much. Always great to catch up. Thank you for joining us on Bloomberg.
Thanks for having me again.
Jesse Powell, there, Kraken
Great talking.
Chief Executive and co-founder. Now, coming up, the UK reaches an agreement over Airbus and Boeing with the US just days after its brokers its first free trade agreement after leaving the EU. Now, we'll discuss the outlook next with Siobhan Haviland, British Chamber of Commerce Director General. This is Bloomberg.
I think what we're seeing during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Economics It's Finance Politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, the UK and the US have reached an agreement to end the dispute over Boeing and Airbus. The pact comes after the EU brokered a similar deal, but Washington also needed a separate agreement with Britain after Brexit came into force. Now, this comes after the UK brokered its first free trade agreement since leaving the bloc with Australia this week, offering some positivity to the nation after it was forced to extend its COVID lockdown for an additional 4 weeks. But what does this all mean for business? Well, joining us now is Siobhan Haviland, British Chamber of Commerce Director General. The BCC is actually hosting its global annual conference this week. Siobhan, thank you so much for joining us. So what is the number one concern for a lot of your members? I imagine it's, not the economy being fully reopened, but with that, are there longer term implications for them?
Hi, good morning. Yes, of course, our members are still concerned about the roadmap and obviously the extension that we saw this week and ensuring that the right business support is in place to get them, to the 19th of July. At the same time, we're really beginning to see positive glimmers of hope from our members. They feel quite positive about the future. At our conference today, we'll be talking about two things. So we'll be talking about what we'd like to see put in place by the government to help that, put that scaffolding in place for our members so they can rebuild out of the pandemic. But also we'll be talking about some of the big areas that we think are really important to nurture that growth. So global trade, skills, and the green economy.
Siobhan, what do they need from government? So because we're not fully reopened, unclear exactly what kind of path forward we'll see. Do we need more furlough schemes? Are they getting enough support from the government? Or is it the smaller companies that really, struggle because of the support available?
As we've seen the roadmap change, the dates changed, we think it's totally logical that we should also see the great business support the government has put in place extended with the roadmap. So we would like to see the extension of cash grants for businesses that are either still closed or working in very restricted ways, and the extension of the furlough scheme, which is due to taper off at the beginning of July, extended to the 19th of July. There are some other things that we'd like to see put in place before our businesses can open again on the 19th of July, both around social distancing review and workplace testing. Workplace testing, we want to see that remaining, as cases may continue to rise, the workplace testing remains low or no cost for our businesses.
Siobhan, 6 months on from Brexit, what's the kind of, how do you take stock of how UK businesses are coping with that?
They're still working their way through the change in rules. It's been a tough six months for them. We see about 50% of our members struggling to work out, how to put the new rules in place. But that's what we're here for. So, on a trade front, we have huge capacity across our 53 chambers across the country to give expert trade advice. We help our members with trade documentation, with customs declarations. And we also have a network of 73 international chambers around the world who can help our businesses, export more into those markets.
Siobhan, when you look at some of the trade agreements that we've seen with Australia, some of the things that we're also negotiating on the back of the G7, that was of course held here in the UK, how much time does that take to filter through your members? So how much, if you have a trade pact, by the time it's implemented, how much time does it take for your members to then benefit from it?
So we really welcome the trade deals that are being done by the UK. We think that's a good thing. Ideally, we would like to see a broader trade and investment strategy. So we really like the government to bring together all organisations, public, private sector, so we can build a real ongoing big picture strategy for our trade and investment. But in the meantime, any trade deals that we're doing are good things, and we as an organisation are here to help our members work through the detail of those once we have them.
Great. Thank you so much for joining us, Siobhan Haviland, there, British Chamber of Commerce Director General. Now, coming up, we get back to covering all the action at yesterday's Fed meeting. What are the implications of a stronger dollar for commodities and EM? That discussion with Market Live's Eddie van der Walt. That's coming up next, and this is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
This is a market that, over the past few weeks, has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, joining us to talk about the markets after the Fed day that really took some parts of the markets by surprise is Eddie van der Walt. He's a Bloomberg MLive strategist. Eddie, I mean, we were all watching that press conference, and it was pretty clear that, I mean, dollar could move further after what we heard yesterday.
Yeah, I think so. And I think we've seen that on Markets Live, where the strategists are just all saying that, you know, there could be more upside for the dollar here. And if there is more upside for the dollar, that has knock-on implications for EM as a basket, for commodities as a basket. As much as I hate treating those things as a basket, I think there are, you know, implications for those two asset classes that is going to reverberate across the coming sessions.
Eddie, where do you see I mean, is there another part of the market actually where you see quite a lot of action that was unexpected? I know yield curves are moving, that's to be expected, but what are the further implications of what we heard yesterday?
Yeah, so we've had you know, the morning has been very busy on Markets Live because all of these asset classes are trying to find their equilibrium levels after that decision, and particularly with Lane then also coming in and you know, just keeping the dovish narrative at the ECB alive. So at the same time, you've got some downward pressure uniquely on the euro as you see the dollar rise. I think in the commodity space in particular, You know, there's a lot of factors playing out. We've got still OPEC expected at some point to start increasing production. At the same time, you've got copper, which should be resilient on the idea of, you know, of just longer EV demand. But I think the one asset that I would be watching very closely here is gold. Gold had a good run in the second quarter. I think that's coming under a bit of pressure. We're back down at 1,800, and I think that those losses could be extended in the next few sessions.
Eddie, we also had a great interview of Philip Lane, of course, the chief economist of the European Central Bank. What did you make of, you know, how the ECB actually will try and position itself? Yeah, the ECB's traditionally a bit more dovish, and they've had reason to be so in you know, in history. The problem is that if they stay dovish too long, it can create that feedback loop that goes into their banks that just destabilizes the whole zone. So it's interesting that they remain dovish at this point. Nobody's really surprised, I think, by that. But I think the risk is that they remain dovish for too long. Eddie, thanks so much. Eddie van der Veld, their Bloomberg MLive strategist, as always, with great insight on what we should be watching out for the rest of the day, especially important on the back of a Fed decision day. Now, Bloomberg surveillance continues in the next hour. Matt Miller joins me out of Berlin. Kaylee Lyons will be out of New York. Now, the focus will be firmly on the markets after what we heard from Jay Powell yesterday. A couple of other stories, of course. We'll try and look at the implications of the U.S.-Biden meeting in Geneva, what it means for our foreign policy. And then I'm also looking, of course, at you know, some of the risks of inflation that Jay Powell's acknowledging, saying that officials had begun a discussion about scaling back bond purchases. We're trying to figure out the ripple effects for other central banks around the world. So we're looking at all parts. I mean, it definitely marked a turning point in the Fed's communication to global markets, which had so far been ultra dovish. So more on that shortly. This is Bloomberg.
Announcing a project and doing a project is something different. And that's why we are so proud. We have started now the first one here. It's running, and I believe that we will see scalability. To show use cases, so we can develop new cases on how to build a hydrogen economy.
The curtain will rise rise again.
Broadway's returning June.
Have you bought tickets?
Is busted out.
You've got
all
more
over.
time here. If you want.
Commodities are up.
Keep going.
To the moon.
Beautiful.
Bloomberg Surveillance, weekday mornings on Bloomberg Television and Radio.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
The earliest we're going to get an announcement is probably September on tapering. And then based on history, we shouldn't expect any real action until we get into the late first quarter or to the this early second quarter of next year.
I think it's really important that the Fed is responding to exactly what it said it would, and that is the data as it comes in. Inflation and the flare in inflation has come in much stronger than they thought.
I think the risk is that they're going to be too slow because they basically said that they're not even going to start to tighten monetary policy until there's three conditions.
This is Bloomberg Surveillance, early edition with Francine Lacqua, Matt Miller, and Keely Lines.
It's 10 a.m. here in London, 11 a.m. in Berlin, 5 a.m. in New York, 5 p.m. in Hong Kong on this Thursday, June 17th. Our top stories today. Rattling their sabers, Fed policymakers surprise financial markets by signaling they expect to raise interest rates twice in 2023. The European Central Bank may stay the course. In an exclusive interview with the ECB chief economist Philip Lane, he tells us why the bank may not start tightening until up in September. And drug makers will take a dive. Shares of CureVac lose more than half their value after disappointing results in a study of its COVID vaccine. So we have quite a lot to get through today. A lot of the focus on the central banks. And Kaylee, we saw a dollar move. It could go even higher, but certainly it's repriced a lot of the markets across the world.
Yeah, a stronger dollar on that hawkish surprise, Francine. We now have a dot plot reflecting 2 possible rate hikes in 2023 and talking about tapering. Plus, Jerome Powell said there is a risk inflation goes higher than maybe they think. So that is rippling across markets and across asset classes throughout the world. In the Asian session, it was mostly risk off. You did have Chinese and Hong Kong equities higher, but broadly the Asia Pacific MSCI index was down, and the Nikkei actually underperformed, down the better part of 1 percentage point. You saw it reflected in Asian currencies as well, most of which are weaker against the US dollar. The loss is really being led by the Korean won, which is weaker against the dollar by 1.2%. And in the bond market, we saw Australian and New Zealand bond yields surging. In Australia, the 10-year benchmark up about 10 basis points, although stronger jobs data did have something to do with that as well. As for what the picture looks like here in the U.S., of course, we saw stocks and bonds selling off after that hawkish Fed decision yesterday, and we are seeing those losses continuing, at least in the equity market this morning. S&P 500 futures down about 18 points. In the bond market, we saw an 8 basis point move higher yesterday. We are coming in just a touch today, but still we're right around 1.57% or so, which is the highest that yield has been in about 2 weeks. It is a stronger dollar story again, as Francine said. Actually, the 5th day in a row, the Bloomberg Dollar Spot Index is higher, now at the highest since mid-April, and that is weighing a touch on the commodity complex. Of course, a stronger dollar not necessarily good for some of those commodities, and crude oil is down. WTI is now just around $72 a barrel. Matt, what's the picture like in Berlin?
Well, we're watching the Fed moves ripple through assets over here as well. Obviously, Kaylee, you can see that in the markets. Take a look at this map. We're down pretty much across the board. You can see Spain there lit up green, but everything else is red. And the Stock 600, the broader benchmark European index, is down as well. If you take a look at where the Fed moves are hitting the hardest, you can see that we have Bund yields rising, just like 10-year yields. In fact, yields across the complex are up, and you have the euro there losing ground against the dollar. Very interesting. The Fed's move yesterday sparked a few changes in bullish euro calls at big reputable analysts like Deutsche Bank, like Goldman Sachs, I mean. Goldman Sachs previously saw the euro gaining against the dollar. It's now turned that view around since we saw and heard the Fed decision. And then Santander, I have it here right now up 3%, but Banco Bilbao Vizcaya is also a big gainer today. That's the reason you see the gains in the IBEX. So the IBEX is outperforming the rest of the European indexes because Mrs. Botin said that the Spanish economy is going to do even better, in her opinion, than the Spanish central bank has forecast, and the global economy, the global economic growth is, I think, off the hook or off the charts. I can't remember her exact phrase, but definitely going to be very strong, maybe even double digits over the next few quarters. So we are seeing some changes there. We also have some breaking news, Francine, on Huarong. What's the story there?
Yeah, so first of all, Matt, this is probably one of the biggest stories to come out of China over the last couple of months. And now it was suspended for 50 days, and now it's falling as soon as it started reopening. So it's reopening on the MSCI stock index. Remember, China Huarong Asset Management has been basically also ramping up efforts to sell some of their local units. So this has rippled through effects in the Chinese, of course, investment community, and we're trying to figure out exactly what the conglomerate will become. But it is, I guess, a step forward that it has now reopened, but Huarong dropping, but at least it's no longer suspended after 50 days, Matt.
Yeah, very interesting story. We were all following that so closely to see what President Xi would do. He wants to stamp out moral hazard to some effect, but that's very difficult when you've got a big bad debt holder like that. That we're not always 100% sure they're going to make their payments. So that's why we watch that closely, because there are so many other such companies throughout China.
Yeah, and Matt, of course, the ability to repay really hinges partly on how much money it gets from selling off assets. So that's something that we really need to watch as well. Kaylee, I know you've been following this.
Yeah, so there's some rules here at play. Of course, it's been 50 days as of yesterday that since Huarong did not report its 2020 financial results, and per MSCI rules, within 3 days after that 50-day threshold, the stock will be dropped from the indices. So that's what's happened here. Huarong has been dropped from the MSCI stock indices, Francine.
Oh, apologies. That's absolutely right. So it's not dropping because it's reopened. It's still suspended, but actually it's no longer part of the MSCI. Thank you, Kaylee, for that. Now, a look at what else is coming up today. Turkey and Ukraine are the latest central banks to release rate decisions at 7 a.m. New York time. Now, we'll get U.S. initial jobless claims at 8:30 a.m. Euro area finance ministers are meeting today. Janet Yellen also testifies before the House Ways and Means Committee about the proposed 2022 federal budget. Now, stocks and futures on the decline this morning after Fed officials sped up their expected pace of policy tightening. Our Laura Cooper, our Bloomberg MLive macro strategist, joins us now. Laura, the dollar has seen a couple of swings. Will it continue, being on the move?
Well, I certainly think that is the case. Just looking at what we saw in real yields yesterday, it was quite a sharp move to the upside. So that does provide more of a catalyst to the dollar. And I think really what the Fed did yesterday was that hawkish surprise laid the foundation for that policy pivot. So if we look, they are potentially flagging upside risk that inflation could be more sustained. We also saw them strike quite an upbeat tone around that labor market recovery. It could be very strong. So I do think there is a degree of recalibration that needs to occur in the rates market, which ultimately should give the dollar further upside.
Well, let's talk about not just the Fed, but also the ECB, because meanwhile in Europe, the chief economist over at that central bank has signaled they may not have enough data by the September meeting to start shifting policy. He spoke exclusively with Bloomberg earlier. Take a listen.
There will be a time when it's no longer premature and unnecessary to talk about it. But right now, the focus, honestly, for me, is we're going into a very interesting summer, and the challenge of preserving favorable financing conditions, we have to keep our eye on that.
So, Laura, I guess the question is, if you have a Fed that's looking at potentially starting to taper or make a decision on tapering by September, and yet an ECB that may not know in September what it's doing, what does that world look like?
Well, I think we are starting to see that play out already this morning in terms of that central bank divergence. We are seeing the euro on the back foot. And really the comments from Philip Lane this morning are quite timely in the sense that his comments were quite soothing, that did cool some of that rate sell-off that we saw when European bond markets opened this morning. And I do think that that divergence is going to be a dominant market theme going forward. It's going to likely be too premature for them to start tapering in September, whereas the Fed is clearly laying out a different policy path. So I would expect that that is going to play out in some of kind of challenging those bullish euro consensus bets.
All right, Laura, thanks very much for that. Laura Cooper there talking to us about what reverberations we're seeing from the Fed decision yesterday, what we're hearing from Philip Lane in the ECB this morning. We have, in terms of the virus, in terms of global travel, breaking news out of Hong Kong, said to approve easing travel quarantine for the vaccinated. So maybe making business between Hong Kong and the rest of the world a little bit easier. In terms of things that are bad news, down arrow stories, as we would say, CureVac continues to plunge here in Germany. A preliminary analysis of a large study found its COVID-19 vaccine shows only 47% efficacy, well below the bar set by other mRNA vaccines. Sam Fazeli, Bloomberg Intelligence Senior Pharmaceuticals Analyst and Director of Research for EMEA, joins us for more. So, Sam, this is an mRNA vaccine based on the technology that's so promising out of BioNTech and Moderna, but it just isn't working as well. What's wrong?
Yeah, good morning, Matt. So I think the company wanted people to feel that it's more to do with potentially the variants than their technology. And I don't think that's fair, and I think that's a little bit too much to push that view out without more information and data. There is fundamental differences between the way they designed their vaccine to the other two, and I think that could have had something to do with it. We did point that out just a few weeks ago, trying to second guess what the outcome would be.
What's the latest? I mean, what does it actually mean for other vaccines in general? And what does it mean for getting these vaccines to the developing countries that need it most?
Yeah, so that's the really tough part, Francine, because this is a vaccine that was an mRNA vaccine, so it had the hopes of those kinds of efficacy levels, but was refrigerated as opposed to a -70 or -20 freezer requirement, and a lower dose. So the hope was that you could get more of the vaccine easier to different parts of the world, and unfortunately, that's not panned out.
All right, Bloomberg Intelligence's Sam Fazeli, thank you so much. As we can see there, CureVac shares, those ADRs here in the U.S., down something like 38% in pre-market trading here in the U.S. And as for some other stocks that are moving in pre-market trading, CureVac may be lower, but other vaccine makers actually are higher, one of them being Moderna, which is higher by about 1.1% in early hours. You also have Novavax higher as well. It's up about 5%, although it may just be recovering from the losses it saw yesterday because of some supply chain issues. I also want to take a quick check on some of those meme stocks, the Reddit trader favorites. One of them has been Torchlight Energy, though. It has now made a at-the-market offering for $100 million in shares, and as a result, that stock down the better part of 4%. And of course, Arrival, the EV maker, was one of the latest Reddit stocks that was touted yesterday, higher on that yesterday. Today, though, sentiment seems to have very quickly changed. That stock down about 3.4% in early hours, Francine.
Now, we'll talk a lot more about that in the next couple of minutes. We'll also catch up, of course, with Luca Paolini, Pictet Asset Management Chief Strategist, on the Fed, what it means for dollar, and some of his holdings on bonds. Then, a little bit later on the trade deal with Australia, Greg Hands, UK Minister of State for Trade Policy. We'll see how that trade deal between Australia and the UK can benefit UK companies and business. This is Bloomberg.
we're now in the early stages of a sustainability revolution.
The battery problem may be the biggest unsolved problem in all of technology.
Every time the United States has done great transformative things, there has been a partnership between government and the private sector.
With a willing partner to ensure competitiveness and draw in investment in the United States, Canada is going to be able to be even more ambitious.
The objective for Glasgow, first and foremost, is to keep that 1.5 degree temperature rise within reach.
The train has left the station. Investors care about it. People who work inside of corporate America care about these issues. And certainly we see that with just the broader community.
There's not enough tax in the world for private sector to pay for all of this. It's going to have to be a public-private partnership.
Liftoff is well into the future. The conditions for liftoff we're very far from maximum employment, for example. It's a consideration for the future. So the near-term thing is really, the near-term discussion that will begin is really about the path of asset purchases.
Fed Chair Jerome Powell speaking after moving forward the central bank's, well, he didn't move forward the central bank's rate hike forecast, but the dot plot now shows that more Fed members see rate hikes sooner than they previously did. He says to take that with a big grain of salt, and I think on that we can agree. That's not really what the central bank plans to do. But he did say they are now talking about tapering. I've got a chart here. I'm working on this. It's a work in progress, folks. I'll tell you, for those on radio, what this is. Daniel Curtis, my New York-based producer, and I are looking at this because of some of the notes we have on our next guest. This shows U.S. CPI, and it has been humming along at a low level for the past, this is a 10-year chart, but all of a sudden is taking off, as we all know. The blue line is U.S. real wages. So these are nominal wages minus CPI. They are not really taking off. We saw a big bump in 2020 because inflation, of course, dropped at the beginning of the pandemic, but they haven't really lifted off when you consider inflation. Joining us to talk more about this is Luca Paolini, Chief Strategist at Pictet Asset Management. Luca, you say the inflation that we're seeing is not transitory. Inflation is real, but we haven't seen the wage growth that is needed to force the Fed's hand. Is that the only thing that's that we need to see to bring about a taper?
Well, I think, when you look at inflation, what I'm saying is that this is not a base effect. There is something more. I don't know if it's transitory or not. And the proof will be on wage inflation, because wage inflation is stickier and has been trending up, as you see in your chart, actually in the past 10 years. But it's still at roughly 3%. So I think if you see an increase in wage inflation, with the unemployment probably falling to the equilibrium employment next year, well, then I think there is a strong case to be made to accelerate, not only to taper, but actually to do it pretty quickly. And I think this is kind of what we have seen yesterday from the Fed, is that they start to feel uncomfortable with a GDP running at 10% on an annualized basis, inflation higher, and it's unsustainable to keep the monetary policy unchanged in this environment.
But Luca, what does it mean for the relationship between the markets and actually the Fed? So the market kind of had predicted this and then aligned itself with what the Fed was saying. Is there a break of, I don't know if it's correlation, but will the Fed now be much more aggressive in pricing in stuff, even if, the Fed says otherwise?
Well, when you look, Francis, when you look historically, there is always this trend of investors getting the timing wrong. They always expect the Fed to start hiking earlier. and to be very slow in hiking. I think this time it may be slightly different, but for now we see pretty much the same story. So I suspect that the market is getting the terminal rate probably right, but the Fed will start hiking late, but I think will actually accelerate their hiking or their tightening process very, very sharply. Again, talking now or next month doesn't make a big difference. I think the big difference will be when the market starts to price in an accelerated pace of tightening. And we are probably still, I would say, a few months away, if not a little bit longer. So that would be my interpretation.
A Fed that is talking about tightening policy or talking about tapering, looking to hike rates in 2023 suggests a certain level of confidence about the economic recovery. And an economic recovery, in theory, is a pro-cyclical narrative. But you're pulling back on your cyclical exposure here. Why?
Well, because we think that global, especially U.S. growth momentum must peak. We've seen a number of indicators from retail sales, home builder confidence, business survey. They show that the peak has been, we have passed the peak in terms of momentum. The economy is still very strong. The labor market is strong, but we are not, relative to 6 months ago, momentum is weaker and inflation is higher, which is not a good combination for cyclical assets. They trade at incredibly high levels. Everybody's long. So it's a combination of peaking momentum and positioning. It's not the end of the bull market, but I think a rotation into a more defensive place at the current stage makes sense tactically.
Luca, what does that mean for example, the ECB? So we had a great interview with the chief economist of the ECB today saying, look, you know, September may be too soon to actually start discussing shifting away from the ultra loose monetary policy, but does it pressure other parts of the world to be more hawkish?
Well, I think Europe is lagging the US by usually 3 to 6 months. This is no different. I think in Europe, we haven't seen the same fiscal stimulus we have seen in the US. So that's one thing. So I think they're right to be a little bit more cautious. But if the numbers continue to be as strong as they are now for Europe, I think there will be a strong pressure for the ECB to start at least signaling a change, an hawkish turn, like the Fed did towards the end of this year. But we still have time. We still have time, and they're not going to take any risk definitely in the summer. So I think it's something we can discuss about it probably in September, October, but definitely not before that.
Luca, thank you so much. Can we take a moment, Luca, actually to gloat about how Italy's doing quite well in the Euros and actually playing quite well as well? I don't know if there's like a little Italian dance.
Yeah, no, we are saying that. Yeah, football is important. No, I think what is interesting that we are playing in a very un-Italian way, attacking football, something I've never seen in a long time. I don't know if it's a good or a bad sign. We will see in the next few weeks.
Look, I am sure there's a correlation between Italian bonds and the way we play football, but we'll look into it and dive deeper into it with Luca Paolini, Chief Strategist at Pictet Asset Management, another time. Now, coming up later today, a conversation with the Bank of America Chief Executive, Brian Moynihan. That's at 8 a.m. in New York, 1 p.m. in London, and this is Bloomberg.
Bloomberg Surveillance puts global markets into perspective.
We're going to try to fold an economic theory here with what we've got.
Based on data.
The focus is going to be on the data, the manufacturing data.
How the market responds will be really interesting.
Timely conversations.
Part of getting out of this hole is big fiscal.
Keeping you up to date on trends.
When do you take this thing off?
So you put it on to take it back off.
Wake up with Tom Keene, Jonathan Farrow, and Lisa Abramowitz. Weekday mornings on Bloomberg Television.
Countries that entered this crisis with limited fiscal space, with more vulnerabilities, need to be supported for the benefit of the world.
The transparency of the debt burden for the poorest countries needs to be increased. There needs to be fuller disclosure.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, Matt Miller in Berlin, Kaylee Lyons in New York. Now let's get straight to the Bloomberg. First word news and prospects for a bipartisan deal on a U.S. infrastructure are improving. 20 senators, including 11 Republicans, have signed onto the framework for a $579 billion package. Now that's the biggest in decades, although it's a lot less than President Biden actually wants. It also includes a plan to index the gasoline tax to inflation, which the White House opposes. Now, police in Hong Kong have arrested the 3 top editors at the pro-democracy Apple Daily newspaper. 2 of the paper's executives also have been arrested. While they're accused of breaches of sweeping national security law, the paper's founder, Jimmy Lai, is already in prison for attending unauthorized protests. And the Securities and Exchange Commission have once again delayed the ruling on a Bitcoin ETF. Regulators said it will seek more public comment on a proposal to list the product on CBOE global markets, while the Bitcoin ETF could catapult the world's largest digital token into the mainstream among institutional investors. Now, coming up, we talk about the UK striking a new trade deal with Australia. We'll be talking to Greg Hans. This is Bloomberg.
Vietnamese people have shopped at wet markets or mom-pop stores for decades, and now e-commerce companies are trying to change this habit. Those including regional players like Shopee or Lazada or local startups Tiki have been building loyalty and trust by providing Vietnamese with services that are common in developed economies but very new to this country.
Mình chỉ cần ngồi ở một chỗ thôi và lên một cái trang web chẳng hạn thì mình có thể tìm được là rất nhiều cái mặt hàng ở trên đó. Thứ hai nữa là về cái tốc độ giao hàng thì bây giờ cũng đã nhanh hơn rất là nhiều rồi, thậm chí là có những cái mình có thể nhận sau 2 tiếng như Tiki Now chẳng hạn.
The epidemic has given digital retail a boost, with more Vietnamese buying everything from food to electronics online.
Còn một cái nữa đó là tại vì cũng đang dịch ấy, thế nên là nếu mà mua hàng online thì sẽ an toàn hơn cho tất cả mọi người, bởi vì là mình sẽ không cần phải ra ngoài và tiếp xúc với nhiều người.
The country's e-commerce is expected to reach 29 billion in 4 years, from 7 billion last year. The government is also encouraging this sector with target of online shopping to account for 10% of Vietnam's retail sales by 2025.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, Matt Miller in Berlin, Kay Lyons in New York. Now, Matt, it's all, of course, about the Fed. We look at dollar. It moved yesterday, could move further. And I think the big question is whether it spurs other central banks to be a little bit more hawkish as well.
Yeah, I thought that was actually a really interesting point, Francine. And I noticed in Hillary's chart note this morning that we do have a graphic showing, if you look at all the world's central banks, many more are raising rates now than cutting rates, as opposed to, the opposite was the case at the beginning of the year. So I think you're spot on with that observation. Maybe we see that accelerate throughout the year.
Yeah, so we'll have a look at, whether assets move on the back of it. What are we seeing now on the markets, Kaylee?
Well, Francine, we have seen this Fed decision, the hawkish Fed decision rippling across assets all over the world. And actually, the stock 600 in Europe is going to snap potentially its 9-day record streak. It's hit a record for 9 days in a row as of yesterday. Today, though, that index is down by about 0.4%. And here in the U.S., we saw stocks falling after that Fed decision, and those losses are continuing. Right now, S&P 500 futures are down about 15 points. The 10-year Treasury yield, meanwhile, is about 8 basis points higher right now than it was before 2 p.m. Eastern time yesterday. Right now it's sitting at 1.56%, which is the highest in around 2 weeks. And then, of course, as you were just discussing, it is a stronger dollar story again for the 5th day. The Bloomberg Dollar Spot Index is now at its highest since mid-April. As for some stocks moving in pre-market trading, I have to start with CureVac, which is the big mover to the downside. Those ADRs down about 40 points. That's after efficacy data out of its COVID-19 vaccine trials showed it worked less than half the time, only 47%. So that really throws the future of that inoculation into question. We are, though, seeing other vaccine makers moving to the upside. Novavax up by about 5%, Moderna by about 1%. And then, of course, have to check on a Reddit stock as well. That is the name of the game in 2021. Arrival Group was in favor yesterday. The stock rose today, though. It is retracing that a bit, down about 3.2% in early hours, Francine.
Kaylee, thank you. Now, the UK and Australia have struck a free trade agreement as Britain seeks to expand its post-Brexit economic ties around the world. Now, Australia Trade Minister Dan Tehan spoke with Bloomberg earlier this week.
The UK will potentially get access to the CPTPP. This paves the way for that accession. So for British farmers and other British exporters, potentially opens up huge markets for them as well as the Australian market. So a deal of real substance.
Well, joining us now is Greg Hands, UK Minister of State for Trade Policy. Mr. Hands, thank you so much for joining us right here on Bloomberg. Now, there has been criticism of the deal just because some of the British farmers may not be protected enough. With this deal, basically, the deal gives generous, immediate tariff-free quotas for Australian beef and lamb in a sizable amount. What does it mean for British farmers?
Well, it's actually phased in over a 15-year period, access for Australian beef and lamb exports to the UK. So it's a phased-in liberalisation. I think for UK farmers, we already actually have an agri-food trade surplus with Australia, so there's good opportunities there. But particularly looking forward to joining the CPTPP trading area, 11 countries across 4 continents, the ability for UK farmers to sell into some of those fast-growing Asian and American markets. I think looking forward, that is the real opportunity for UK agriculture.
If you look at some of course, the welfare standards in some of the products sold, it's different in Australia than the UK. So, for example, it's legal in Australia to sell hormone-fed beef, not in the UK. Hot branding legal in Australia, not in the UK. Will you keep the same standards for imported goods from Australia, or could that potentially change?
You're absolutely right. Our import standards will remain unchanged. Nothing in a free trade agreement changes our own standards. Those will remain very high. Australia has got different standards to us on its domestic production, but everything that Australia sells to the UK must meet our import standards. Worth pointing out that Australia has actually got higher standards in some areas. They ban foie gras production, they ban the castration of meat chickens. There's areas where Australia could argue they've got higher standards than us. But the most important thing is that any Australian goods coming into the UK must meet our high import standards.
You know, before Brexit, one of the arguments was you'd be able to strike your own trade deals. How is that going? Is trade going to pick up substantially? Are we going to see that in GDP growth?
Oh, well, look, you're right. What we've done is we've rolled over EU trade agreements with 67 countries. We've done a major trade deal with the EU itself. The Australia deal is our first post-Brexit from scratch new trade agreement. There's no EU-Australia trade agreement. So this is our first deal. It's a very, very good deal for the UK overall, and also leads to us joining the CPTPP, Trans-Pacific Four-Continent free trade area. So there's huge things going on. We've just done a deal with the United States on large civil aircraft to an understanding on the Airbus-Boeing dispute. So we are doing a huge amount here to improve Britain's trading position going forward on a number of fronts. It's a very exciting time, I can tell you, at the Department of International Trade.
Is there anything you can do, Minister, about the making the sausage, the back office of these trade deals? They take notoriously long. The EU-Canada deal, I think, took something like 17 years to put together. Can you do these things faster, or is it just the nature of the beast?
No, I think you can do these things faster. They do need a lot of work. Ironically, I'd say that working on Teams and Zoom has made the whole process of trade negotiations actually easier. You know, as long as you can overcome the time difference, doing it this way rather than having to, you know, fly to Australia and be camped out in a hotel room for a couple of weeks. In some ways, it's actually easier to do it this way. So we found working efficiently with our Australian partners. We're working very hard with New Zealand at the moment. We'd like to get back round the table with the US, having come to this understanding today on the Airbus-Boeing dispute. We'd like to get round the table with the US and do a free trade agreement with the US as well. But we found that we can forge ahead on all of these fronts. And the UK, we're in a good position going forward.
Mr. Hans, how does the deal actually affect the Northern Ireland Protocol? So do you need extra checks to make sure that Australian goods don't come into the EU through a back door?
Well, Australian goods will be able to access Northern Ireland. There is language on the Northern Ireland Protocol within the UK-Australia Free Trade Agreement. Just as important, Northern Irish exporters will be able to take advantage of the Australia Free Trade Agreement to sell into Australia as well. So we think it's a really good opportunity for consumers, businesses in Northern Ireland. I'm looking forward to discussing it further. I've had a couple of meetings with the Northern Irish Executive. I've met with the Ulster Farmers Union to talk about opportunities. So I think it's a good deal for Northern Ireland as well.
What does, a relationship between President Biden and Prime Minister Johnson actually mean for trade between the two countries? Do you see it on a better footing than it would have been with President Trump?
Well, I think President Biden has always talked about rebuilding alliances and building alliances around the world. And there's no better or stronger ally of the United States than the United Kingdom. So today we've seen in this deal on the Airbus-Boeing dispute resolving what has been a 17-year-long trade dispute. The UK actually made the first move in resolving that by not rolling over the retaliatory tariffs that we had at the beginning of January. So working together well there, we'd love to do a free trade agreement with the United States. The US is our largest bilateral trading partner. But also for the US, the UK would become overnight the largest economy with which the United States has got a comprehensive free trade agreement. So it'd be a big thing for both sides, and we'd very much like to get that deal done too.
Thank you so much for your time today. Greg Hansler, the UK Minister of State for Trade Policy. Now, coming up, Kamaksha Trivedi, Goldman Sachs, co-head of FX, Interest Rates and Emerging Market Strategy Research. That's coming up shortly, and this is Bloomberg.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lines in New York with Francine Lacqua in London and Matt Miller in Berlin. Well, Francine, Matt, we of course had that hawkish Fed decision yesterday, and we have to talk about its impact on the dollar because we saw a massive move. The Bloomberg Dollar Spot Index actually surging the most in about a year, and that saw the Bloomberg Dollar Spot Index ripping above its 50-day moving average. It is now at the highest level since about mid-April, essentially cutting its losses for the year of 2021 in half. The question now is, how long can it last? Joining us now to hopefully answer that question is Kamaksha Trivedi, co-head of Global Foreign Exchange, Interest Rates, and Emerging Market Strategy Research at Goldman Sachs International. So, Kamaksha, I will pose you that question. How sustainable is this dollar strength?
Look, I think we clearly had a pretty hawkish outcome from the meeting yesterday. I think that what we learned is both that the timetable towards tapering has kicked off. This was the meeting where very firmly they clarified that they were talking about tapering. But also we learned that the average inflation targeting Fed, the interpretation of that is a pretty strict one in the sense that you have a couple of couple of hikes in the median in 2023, even with inflation not being that far above target. Those are pretty hawkish outcomes, and they are going to support the dollar, especially I would think against other major currencies like the euro, the yen, for a little bit further as we reprice this shift and as we reprice this reaction function from the Fed.
So what does that mean for some of the emerging market currencies? We've seen Asian ones in particular under some pretty immense pressure today.
I think for the next session or two, I think we're going to have to reprice this hawkish outcome, this new interpretation of the reaction function. And I think you can expect to see kind of a broad-based dollar move higher and emerging market currencies come under pressure. When you sort of widen out the horizon, though, as you look a little bit beyond once that initial repricing is done, one of the reasons why emerging market currencies have been trading well is not just because of what's been happening on the dollar side of things or on the Fed side of things. That is important, but also what has been happening on the emerging market side of things. The fact in particular that you're seeing a pretty significant rebuild in the carry and the yield in the asset class as emerging market central banks themselves are acting in a more hawkish manner and responding to this broadening recovery that we are seeing across the world. And a case in point was yesterday, a few hours after the Fed, you had the Central Bank of Brazil, hiking rates by 75 basis points and coming out with an even more hawkish statements and a more hawkish sort of forward guidance about getting back to neutral rates, more quickly. And so I think part of what is sustaining at least some of the emerging market currencies here, and there's a few other things, there's a broadening recovery, there's some, deep undervaluation, but it is also the fact that they are actually hiking rates as well, in what is a reflationary environment. So we shouldn't lose sight of what's going on the EM side, apart from what's going on the Fed side.
Kamashka, we've been talking about the fact that more central banks now are hiking than cutting, a turnaround from the beginning of the year. On the other hand, the ECB has been pretty clear. At least Villeroy de Gallo came out a couple of days ago and said the ECB is going to prolong their stimulus at least as long as the Fed does. And he also said that the currency is, their main concern, their main job. Usually central bankers aren't this aren't this upfront about watching currencies. Is that one of the reasons that you cut your view on the euro?
I mean, you said it, right? I mean, I think, this meeting from the Fed, in a way, was quite an interesting mirror image from the ECB. I mean, the ECB is probably going to be reducing its pace of PEP purchases over the summer, but they managed to convey that whole thing in an extremely dovish framing. On the other side, for the Fed, there's no imminent action itself, but the framing, the forward outlook through the dot plot, through the press conference was actually, fairly hawkish. So, quite an interesting shift. But I think that's exactly right. That when you look ahead, I think that the places where you could expect to see, some, most clearly dollar strength against that is the places which are going to be much more reticent about tightening policy. The ECB, with its long history of below target inflation, below potential growth, the weight of that history means they're going to be amongst the last. Japan, again, probably amongst the last to tighten. And that's why, I think those are some of the currencies that are likely to see more weakness versus the dollar. That's where I can, really see the dollar move higher against on a more durable basis.
But Kamashka, overall, and good morning from London, is it possible that actually these increasing inflation or price pressures from the US will be exported to other parts of the world? And what's more vulnerable?
I think there is some of that is certainly possible. And I think it's not just pressures from the US being exported to the rest of the world. I think it is also the fact that you have broad-based commodity pressures, broad-based supply chain tightness that is exporting these inflationary pressures. And you're seeing that pretty much everywhere. I mean, I think you've seen that in emerging markets. You've seen that in parts of developed markets. You've seen that in the UK with the headline inflation beat. So it's not necessarily just something that is moving out from the US. However, I think what is likely to be exported from the US is if the Fed is already giving indications of moving in a tightening direction, I think that is going to give a lot of comfort and a lot of impetus to a lot of other central banks across the world, both in the DM and in the EM space, which have been, perhaps moving towards tightening, taking one step, sitting on the fence a little bit. I think a lot of them are going to feel much more confident about moving much more proactively in a tightening direction. I think that impetus or that impulse is certainly one that you will see exported across the world.
Kamashka, I also want to ask you actually about cryptocurrency. Earlier on, I spoke to Jesse Powell, the chief executive of the digital currency exchange at Kraken, and I asked him where the price of Bitcoin will be.
It's really hard to price things in dollars. We just don't know where the dollar is going to go, really. I'm super bullish on Bitcoin. You know, I think $200,000 a coin by the end of the year is still within reach. You know, I've said one Bitcoin, one Lambo by the end of the year. You know, it may be a Lambo with a fewer options or a smaller engine at this point, but you know, I think we're still looking at very lofty price targets here, and you know, I think we'll see a new all-time high before the end of the year.
Kamaksha, how much more do you have to look at some of the crypto coins?
Look, it's not something that we've been looking, you know, at least I've been looking very, very closely at. I mean, I think what is, you know, though becoming, you know, you hear more and more of this, that I think, you know, policymakers and regulators are taking a closer look at this, you know, with the central bank digital currencies. And you had, you know, both actions from China, but also statements from, you know, for example, the governor of the Bank of England the other day about, you know, the regulatory issues that come in this space. So I think there are, you know, clearly, there's clearly, you know, risks on the upside, but there are also risks on the other side. So, you know, I think it's definitely one that we are going to be having to talk a lot more about in sessions like this to come.
Kamaksha, thanks so much. Kamaksha Trivedi there, co-head of Global Foreign Exchange, Interest Rate and Emerging Market Strategy Research at Goldman Sachs International. Now, coming up, we'll speak to the Norges Bank Governor, Øystein Olsen, following the latest rate decision. He was talking about changing some of what they do in terms of monetary policy. Maybe from September, it'll be interesting to get the read across from what we heard from the Fed. That interview, 6:30 a.m. in New York, 11:30 a.m. in London, and this is Bloomberg.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Kaylee Lyons in New York. Now, Tom Keene, co-anchor of Bloomberg Surveillance, who also oversaw our coverage of the Fed yesterday, joins us after a very long day when he was looking at dollar and all the moves, Tom. I'm excited to hear your thoughts today.
Really an interesting day. And as Michael McKee said, Francine, it was a surprise. And as you know, it's always telegraphed and boring. It was not yesterday. And the
Never
markets moved. Brian Moynihan will be here to comment on it. David Weston and Brian Moynihan in conversation. You got to start with the Fed with Moynihan and say, how upset are you? Alan Ruskin with us as well. Mayor Adams may be with us. Eric Adams doing well in the New York mayoral contest. David Rosenberg, I should mention as well, in the governor of the Norwegian Central Bank, which is really looking forward to a great lineup of guests. How about the real yield? Let's look at it. The new phrase is not transitory. The new phrase is substantial further
Grain
progress.
of salt. I thought that was a new phrase, Tom.
Substantial. Yeah, grain of salt, I think, should have been higher up, frankly, in the reporting. But, Francine, it's substantial. The real yield, big negative, has to make substantial further progress to get back to substantial further progress.
Yeah, I love that. That was my catchphrase, Tom, when we anchored together.
Yes.
Always with a grain of salt. Like a tequila.
Substantial further progress. I have no idea what that means.
All right, I do. Central banks do, Tom. I'm looking forward to the show. Tom Keene, their co-anchor of Bloomberg Surveillance Simulcast. Now, let's take a look at what else we're watching today. Kaylee, you're all over sports.
I'm watching golf, Francine. The U.S. Open begins today at Torrey Pines. Of course, Bryson DeChambeau is the reigning champion, but it's actually the Spaniard, Jon Rahm, who is favored to win. It could be his first major win because, remember, he was pulled out of the Memorial Tournament after testing positive for COVID-19. Now, the first tee time today, 9:45 a.m. Eastern. It will run through Sunday, which is Father's Day here in the U.S. And Matt Miller, my wish for you is that you get to spend your first Father's Day watching some golf over there in Germany.
Yeah, well, I will definitely be doing that for sure. I've got the app on my Apple TV box, and I love Bryson's pink shirt with the green blazer there. Very nice. Masters blazer, always a classic. I'm going to be watching something that Francine really pointed out in this hour to me, and then I remembered seeing this chart from London producer Pooja Kandia about central banks. This is global central banks. There have been 84 central bank actions in 2021. At the beginning of the year, there were more cuts than hikes, and that quickly turned around in February. In April, only hikes. So it's going to be interesting to see what the recent Fed meeting spurs in terms of substantial further action. Substantial further progress? Substantial further progress.
There you go. I love that. Actually, you know, it just made me think, Kaylee, that you have multiple Mother's Day if you're French or Italian or American, but I think Father's Day is universal, certainly amongst European and the U.S. and even the UK. What I'm watching for is your
Father's Day
area
here
finance
already.
Ministers. Oh, have you? Okay, apart from Germany, but Italy, France, and the UK are the same day. I'm looking at the EU forging closer ties with the US. What does that mean for this continent? This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
It's an economy that's starting to move from recovery into an expansion phase.
As the Fed tries to remove this accommodation, which isn't going to be easy, you will see market disruptions.
Inflation is going to run hotter and longer than the Fed